Great city, always great to come back to the city of Mumbai. I thank you, all of you, for joining us today. Uh, Throughout the day, we'll be touching base upon various issues and innovation has been leveraged like anything, and especially in last 2 years, we have all witnessed the kind of transformation being happening in this sector. But there are challenges, there will be opportunities also, and our aim was to get the best minds together for this event so that a brainstorm can happen, and we will be documenting whatever the discussions going to take place today, so that that documentation will be circulated to all the stakeholders so that some action can be also taken based upon the discussions which will be made today throughout the day. The first session of the BFSI Finnovation Conclave will be focusing on the banking landscape. And the name of the session is Dissecting the Tech-Led Future of the Banking Landscape. And for that, we have digital transformation leaders from the banking fraternity or the banking ecosystem here with us for the inaugural. Let me first invite Mr. KRC Murthy, Senior Vice President and Head RTB, Kotak Mahindra Bank on stage. A huge round of applause for him, please. We have with us Mr. Naveen Chaluvari, CDO, Yes Bank. We welcome Mr. Naveen. Thank you so much for joining us today. We have with us Dr. Saurav Datta, Executive Director and Head IT of IDBI Bank. We welcome Mr. Saurav. Thank you so much for joining us today. And we're also joined by Mr. Amol Maheshwari, Chief Distribution Officer of Early Salary. A huge round of applause for him as well. And I'll also want to request Mr. Rajneesh De, Consulting Editor of APAC News Network, to come on stage. He'll be playing the role of moderator for this session. And with this, we'll be starting the first panel discussion. But as the Indian tradition goes, that anything which we should start with the lamp lighting. Any good thing, commencement of good thing should happen with the lamp lighting. So, can we have all the speakers together for the lamp lighting, please? Rajneesh, you can go also.
शुभं कुरुत्वं कल्याणम् आरोग्यं धनसम्पदः शुभं कुरुत्वं कल्याणम् आरोग्यं धनसम्पदः शत्रुबुद्धिविनाशाय दीपज्योतिर्नमोऽस्तु ते दीपज्योतिर्नमोऽस्तु ते शुभं कुरुत्वं कल्याणम् आरोग्यं धनसम्पदः दीपज्योतिर्परब्रह्म दीपज्योतिर्जनार्दनः दीपज्योतिर्परब्रह्म.
So, with this, I hand over the session to Mr. Rajneesh De. As we all know that, according to Gartner study, they have predicted that the spending for IT in banking ecosystem will be up around 4 to 5% in 2022-23. That's added to almost $10.36 billion. That is a market size. So I'm thinking I should not say much because you are the digital transformation leaders from banks. So over to you and over to Rajneesh. Thank you so much.
Thank you, Shobik. A warm welcome again to all the panelists and the assembled delegates here as we embark on this second edition of the APAC BFSI Finnovation Conclave. And as Shobik rightly pointed out, it's unique in the sense This is a first time in couple of years we are doing this conclave in person. The earlier edition was virtual, as we all realized during the pandemic. So as we start the panel discussion, in fact, my first question, while we know BFSI has been one sector which has embarked on their digitization journey quite a while back. However, last couple of years during the pandemic, definitely the process has accelerated. And my question to all the panelists, this round we will ask, and I would request you to maybe stick to an answer not more than couple of minutes so that we can cover more points. My question is, how has digitization, one, improved the productivity of the bank itself? And second, how has it enhanced the customer service? So I'll start with Mr. Murthy.
Thank you. Thank you very much for having me here. Good morning, everyone. Thanks for coming early in the morning to attend this. So coming back to your question, digitization is, of course, the primary thing which started when we actually started the organizations, right? That is when the entire thing actually took birth. But as you said, in the last 2 years, things have shaped up so much that in a normal course of routine we would have done in next 3 to 4 years, or it would have taken 5 years also. But the timelines are crunched so much that we accelerated it in couple of months or less than a year. So many projects took day, especially during the pandemic. For example, let me take some of the initiatives which we took. One of the major initiatives was the video KYC, right? We were the first bank in India to launch right during the pandemic, because the business has to go on. People were not walking into the branches. How do you get the business back into the track? You will have to find some way or the other to get things done. So these are the things which actually took birth and innovation started happening, right? And of course, to stick to your question, how does it help? It helps big time, both for internal and external clients. From a perspective of, you have to think, how much can I give the control to the end user to actually do things by themselves? They don't need to approach me or call my call center or something. You just download an app and everything should be done. For example, take our app like 811. When you download it, that's it. You do everything by yourself. You open your bank account, you start transacting. It's a one-stop shop. You do, yeah.
If I may interrupt you here for one point, I can understand during the pandemic, obviously, when physical contact was at a minimal level and it was impossible.
Yeah.
Having said that, when now a sort of video KYC was one, or other digital norms have been established, but still there is a question often in a banking sector, that personal touch, for a lot of financial transaction, and especially if you look at the demographics of your customer, the older people who are not that digital savvy, they still need that personal connect with the bank. So how do you tackle that issue?
You see, that will always be there. That hybrid culture will always be there. That is why we have brick and mortar branches all over across the country, right? So you can't get rid of that. As you exactly said, there is a different demographics. People at a older age kind of thing, they actually love to go to the branch, feel the touch and feel, sit, talk to someone. They get the confidence. Yes, I have got my money, someone is talking to me and all. They are wary of talking to a call center or a bot or something. Like, they don't like it, right? That will still definitely coexist. As we go ahead, as the millennials take over, probably we'll see the entire shift to the other side. But for next couple of years, that will still be there.
Okay. Thank you. Thank you. So the same question I'll put to you, Naveen, now. Basically, in terms of enhancing customer experience and optimizing productivity, how has digitization helped?
So, couple of things. Probably when this pandemic happened, there were three areas I think which has to be bifurcated into when we look at this entire transformation. Couple of them Mr. Murthy has touched upon, where we have actually empowered the customers with the digital platforms. And second thing, I think one of the point that you touched upon, when there is a interaction between the customer and the bank staff, irrespective whether it is happening physically face to face or it's happening remotely, it was very important for us as banks to empower these people who are facing the customers with the right set of technology. I think that's another area where most of the banks have implemented a lot of initiatives around making sure that the people who are facing customer also are thoroughly empowered with sufficient data and insights so that they can have meaningful conversations with the customer. And the third thing I would want to bring to the notice is, if you look at the overall payments, the digital payments that were happening in the ecosystem, before the pandemic, somewhere in 2019, as a ecosystem, we have done about 1 billion UPI transactions. And last month, we have reached about close to 5.95 billion, which is 6 times almost what used to happen just before the pandemic. In this 2.5 years or 3 years, close to 3 years of this particular journey, I think as an ecosystem, everyone has contributed to making sure the systems are geared up to process 6 times the volumes that were happening. And secondly, also sufficiently invested in educating the customers, educating the merchants, and getting various stakeholders into the digitization ecosystem. I think that's one thing which we will have to note, and we should definitely be, like Murthy sir also said, that what could have happened in probably 4 to 5 years has definitely happened in lesser amount of time. And necessity is the mother of invention, right? So everyone actually came across and with different ideas and made sure that people have been pushed to get across the digitization curve in a faster way.
Thank you. In fact, integration with these digital payments and digital apps, we'll take it up in a later round. Maybe that merits a little more discussion. Saurav, I'll come to you next. In terms of one, again, that same question, your digitization experience as far as enhancing customer experience and productivity.
Thank you, and good morning to all of you. Uh, I'd like to just maybe a healthy rivalry here with Mr. Murthy that the video KYC, I think we were the first banks to launch it, and that was on-prem, of course. So coming back to the question that during this pandemic, actually, if you look at it, it's everything has got a plus and minus sides, right? So pandemic, one side is that on the tech teams, they could work from home. Now, today's chair is a bit different because people don't want to come to office. That's a different story. With Musk giving a kind of a, a fatwa kind of thing that you have to come office or you leave the company, right? So, so what is happened during that phase is that people started working from home. We gave them the capability, at least in the BFSI sector. It was very kind of a closeted sector where people could not do work from home. That was kind of a no kind of scenario. But in case of pandemic, we gave access to most of our partners, developers, and as well as the in-house team also. So what happened is that they could get a lot of time and we could do a lot of stuff which could have not been done otherwise. So the productivity increased. What I'm trying to say is that productivity increased during the pandemic time. But of course, like everything has got a plus and negatives thing. So now the people are getting more used to the homework and don't want to come to office. So that culture will again cyclic thing will again change. People have understood like this seminars which are going on online for many months, and people got really tired of it, getting onto webinars, right? So here digitization definitely helped in moving the BFSI sector forward. We had the basic idea is to reduce the contact with the person on the other side, right? So with the digitization, we could reduce the contact, and the speed of processes increased. So that gave a very big boost and leverage to the community as well as to the economy, right? The second piece, what Mr. Rajneesh was also discussing, was for the older generation or the generation who are not tech savvy. So what happens is that so most of this to address that, RBI has come out with a new circular in the month of April with the digital banking unit, right? So it's going to be a separate banking unit altogether, sitting along with side by side with the brick and mortar. It's again going to be brick and mortar, but the idea is to spread awareness, right? So we're going to have the first set of DBUs, 75 DBUs to be launched by 15th of August. So that's the mandate given by RBI. So we'll be having those DBUs coming up, digital banking units, where you'll have a COO, right, sitting a scale 3 officer, right? In the government parlance, it's a scale 3 officer, maybe an AGM in private sector banks, right? So that level officer will be sitting along with all the tools which are available, and everything will be paperless. So it's basically targeted to create awareness. And secondly is that it'll help the the generations who are not tech savvy. Of course, most of them are. In fact, I'm surprised to see that older generation are more tech savvy. They keep posting questions which are even we get stumped upon, right? So those are the advantages of this, and I think it is going to be a good journey forward.
Thanks. Before I come to you, Amol, I'll come to you with a question in terms of how the if I may say the apps or the fintech players, how they are integrating with the banks and that business model. But before that, in light of what the three bankers here, what they have mentioned, while we know obviously in banks security is paramount, and the security infrastructure also is taken care of, but when we are embarking on such extensive digitization journey, and especially the customer interfacing. See, earlier it has more from the core banking and the banking infrastructure side where the security was there. But as more and more the customer facing interface is getting digitized, this security as a challenge. And especially when we talk about our demographics, not all people might be equally tech savvy. So, how that security you people are ensuring, especially for that customer facing part, lesser for the bank. We know bank infrastructures are more or less secure and safe. But what about the customer facing part where a lot of these illegal players are coming, and there are always threats, and especially when so much extensive digitization is happening? I'll start with you again.
See, security, of course, is a paramount thing. It comes first on the top of the table when especially it comes to banks and financial institutions. There is no second thought about it, right? Regulators are also sitting on our head like, a hawk, and they put all kind of controls, whatever is required. Somewhere we really appreciate what they are actually doing from a governance perspective, right? Something that they're making my life miserable, but this is actually good for the ecosystem, right? So when we talk of security, not only the customer facing, the internal facing, as he rightly mentioned, right? During the pandemic, we had opened up our entire infrastructure to the outside world. We don't know who's connecting, from which device they are connecting, from where they are connecting, from which coffee shop they are sitting and connecting. It was a nightmare for us, right? At the same time, you have to safeguard your entire infrastructure, your applications, your servers, your entire ecosystem you have to safeguard, right? That's where your robust security system, what you have established, comes into picture. Your NOC, SOC, and your red teams, your blue teams, all these guys come into action, right? I will not allow any of the applications or any new piece of software or infrastructure getting onto my network without thoroughly passing through my entire IT security checks. Business will come and sit on your head that they have to go live in 2 days and all, but I wouldn't budge unless my security teams give me a go ahead. That is the paramount first thing to happen. Under pressure, we cannot just go ahead and do something and say, okay, on a retrospective effective, we'll look into it. Nothing, not at all possible. I don't mind losing business. I don't mind being third or fourth or 10th in the market, but when I would launch a very robust offering to my clients. And it's all about trust. Banks are all about trust. We don't want to lose the trust just because you want to launch something quickly. Never ever cross the line of security. That's my advice.
Okay. Thanks. Maybe Naveen, your take on the security part.
Yeah, especially with whatever has been happening over the last 4 5 years, where fintechs and banks have come together to co-create and offer solutions, it is extremely important that these partnerships are driven in a responsible manner. I think a regulator also has clearly recognized the efforts that are being put in the ecosystem. They have given few guidances in the last couple of years. One is definitely with respect to how banks will have to follow something called as a digital payment security guidelines. This has been issued amidst the pandemic by regulator, which clearly spells out what are the checks and balances, not only from the security perspective, but also from the customer protection perspective. Because when we actually launch this, it is not just, like he said, launching and getting business is 1 day or 2 day job. But at the end of the day, as banks, we are custodians of trust. That is something which we cannot compromise with. And regulators have definitely taken note of this. They have not only issued this DPSC circular, they're also talking about how do we actually regulate some of these players who are probably making a good impact on the ecosystem. Couple of initiatives that regulators also have taken is they have brought in something called as a TPAP framework, which ensured that all the third-party apps which are providing payment services are also somehow linked with in a tripartite agreement with, say, someone like a NPCI and a bank. Similarly, last year they said we want to give something like a payment aggregator guidelines, so that whoever is actually carrying out transactions like a payment processing on behalf of various merchants or various fintech players, they are also now being brought into the hold of the complete regulations. Similarly, there is a draft guidelines which have been issued in terms of how the digital lending should happen. Just before the session, Amol was saying that probably this decade will be the decade of fintechs, but this decade of fintechs is definitely getting a lot of guidance from the regulator. And we as a banks, as long as we follow those guidance and we be responsible, I think we will have very, very good products coming into the market, and which will marry both trust and also convenience.
Exactly. So, in fact, after we hear from Saurav, we'll come to Amol on that fintech thing. Saurav, especially the DBU thing that you mentioned. So, there again, that customer interfacing security becomes paramount. How have you tackled it?
Okay, so let me give a different perspective. I mean, it's a in a simplistic term. If you look at a security, if you just think of a house, right? So if you have a house and then you're securing your perimeter, so people from every side will try to come into your house, right? So that's the basic concept, and you're trying to prevent people getting into the house. Now, what happens is that you have a team who's protecting this, and the other external actors, the bad ones and the good ones, ethical hackers are also there, right? So, and then you have the bad ones in terms of they may be state actors, they may be individual actors, they may be group of actors from different countries with various reasons, right? So they are trying to attack you at particular area, which are the weak points or the chinks in your armor, if you like to call it, right? So if you need to, the whole team is trying to protect the entire fort or a house, right? And there will be some chink somewhere. So we have to protect that. So what my colleague here also mentioned, that at times it's very difficult to keep the business at bay and launch something, right? So that is a really challenge, and people breathe down the neck of IT guys, and that's a story everywhere. So, so coming back to Rajnish's point is that for the DBU perspective, so DBU is nothing but an extension of the stuff which is already existing, right? It is just an extension. So only thing is that more awareness. You have a bigger screen in that setup where the customers can come. It's a touch screen, so customers can come and punch in their details, right? So there will be no paper-based entries, right? All will be digital entries. So that's the advantage. But otherwise, there is no difference from the systems which will be available in the DBU. So you have the ATM, CRMs, right? The cash recyclers machines. Then you have the kiosks, the printing, the passbook printing machine, and then you have the touch screen where you can do all kind of things, from loans to opening account to KYC and all of that. So everything will be available in the DBU, which is existing in a bank, but in a complete bouquet kind of stuff, with a person who will be assisting whoever visits the particular place. It will be assisted by them.
Okay. Thank you. Amol, now I'll come to you. When a lot of these fintechs and maybe the apps that they're working, so how is that collaboration happening with the banks, and what's that joint business model emerging out of that? So if you can enlighten us on that.
Thank you so much. Fellow panelists have actually opened up a lot of good insights into how digitization has been changing the face of banking and also guiding the future. I just want to put a context as well to it, which is between 2000, when I was studying, until 2020, we've seen 2 decades, and we are in 2022. The first decade was the advent of private banks. Of course, banking has not been new to India. It's been there since 1990s. But when we talk about 2000, it actually called out the large private sector banks. I'll not name the entities. Between 2010 and 2020, we saw the emergence of NBFCs. So of course, banking core function was always lending, how to lend money to meet the needs of enterprises, customers. And between 2010 and 2020, NBFCs challenged banks in terms of doing it faster, democratizing credit. And then banks and NBFC started collaborating. And now we see after 2020, a new decade, which is till 2030, you see various fintech companies. Fintech is nothing but financial services embedded with technology. So that's fintech, and fintech have come in. So it's all about a mindset change. Between 2000 and 2010, the mindset was how can we make more people access banking services. Between 2010 and 2022, it's all about how do we lend technology to make customer journeys, to make experience faster. And fintechs, of course, pandemic has been one of the tipping points, one of the game-changing events. It's been a crisis, and in any crisis comes a big opportunity for any enterprise, and that's where fintech, they wanted to always work vertically. If you see banks work horizontally, wherein they have to expand branches, they have to put all the customer propositions, whether it be banking products, insurance, investments, demat to all the customers. Fintechs pick up a particular problem. It could be insurance, it could be lending, it could be wealth, and they solve a problem. They go deeper in terms of customer experience, customer journeys, business model. And that's where they have the focus is very huge when it comes to fintech. They want to solve a problem in a very different way so that the customer experience goes up. And that's where a bigger collaboration between banks and fintechs has been happening. And today is a time of collaboration and partnerships. Of course, all of us cannot solve a customer problem alone. Hence, you need a lot of partnerships to see the strengths which various entities offer. And in this 2000 and 2022 or till 2030, there are 4 key pillars which all banking and financial services entities go through. It's the 4 C's typically. So you have a customer, you have a compliance, you have cost, and you have competition. Now, the customer has been changing. All the customers, all of us sitting in the room, I can see maybe the average age in this room of around 40, 45. Uh, but all the customers, there has been a pre-COVID era and there has been a post-COVID era, wherein people have changed the way they buy. Everyone has been now comfortable in terms of buying digitally. Everyone wants on demand. You want healthcare, it has to be on demand. You want entertainment, it has to be on demand. You want groceries, it has to be on demand. So now is coming the age of on-demand banking, wherein the customer wants everything in the lap or in his hand at fingertips. Minimal journeys, within 3 clicks, everyone wants to buy a product. Now, if that's happening, banks suddenly cannot change their business models. They have a lot of regulations to follow. And fintechs have been always bettering these journeys. They have been coming out with new models. Hence, there is a huge case for fintechs and banks coming together. Banks may not be able to take a very short-term risk. Fintechs have been solving a problem for new to credit customers, customers who don't have a credit history, customers who are very young, who've not really been exposed to, who don't have even a bank account when they come in. So that's where this collaboration has also been democratizing credit. The space that we are in, digital lending, early salary, we want to do embedded finance in any and everything, wherein a person, we need to power affordability for all kind of customer segments. So be it, an insurance product, be it a healthcare product, be it a consumer product, a e-commerce product, a travel product, we would want to power affordability in every product ecosystem. And that's where banks and fintechs like us have been giving a use case to partner. Banks may not be able to lend within 2 to 3 minutes, without doing a due diligence. Also, the cost of lending to smaller customer segments, wherein smaller customer segments may require 30, 40,000 rupees. And actually, that's the real India. That's the real Bharat we're talking about, wherein people require short-term credits, people want overdrafts. fintech companies may be able to solve that problem faster in a completely paperless way. And that's where banks and fintech companies have a huge case for collaboration. Of course, it has to be a responsible behavior, because it's very easy to do any financial transaction, but not at the cost of compliance. So compliance has to be of paramount importance. And also, see, between the four C's, customer, cost, and competition, that gets answered. But what about competition? Today, everyone is competitive because the customer has been evolving. Today's customer requires everything, at a click of a button. So if it doesn't come to any particular bank as a strength to cater to a particular customer segment or to have a product, there is no harm in collaborating with a player which is a fintech company and get that best of the product, best of the customer experience actually there given to the customer. So that's the case about collaboration between fintechs and banks.
Thanks, Amol. I'll put this question now to the banks. Again, I'll start, maybe let's start in the reverse order. From Naveen, if we start, we are seeing a lot of collaboration, as Amol has rightly pointed out, between banks and many of these fintech apps. Then in the digital banking, a lot of the UPI payments where it's linked to the bank. So a lot of the retail banking services, especially on the retail banking services, there is now increasing business collaboration with these fintechs. So what are the challenges because of this increasingly new business model, and probably the pandemic has accelerated that also? So what are the challenges in that model, and how are banks looking at it?
Yeah, rightly you pointed out that there is a lot of progress in terms of fintech front-ending the customer needs on the retail space, and I think it's only matter of time that other spaces like SME also will follow the suit. That's also because most of the fintechs are investing in solving a problem of a segment. Like if there is a SME which is only looking into, say, agriculture as a segment, they're actually understanding the entire needs of the agriculture as a industry or a segment of business, and then they are actually creating tech platforms or tech interfaces to make sure that they are there. And banks are only making sure that the financial services are seamlessly embedded into it. Now the challenge is a couple of things. One, whoever are coming into this particular fold of partnerships, they will have to have one respect towards compliance. Again, at the cost of repetition, I am telling you this particular piece because we have seen in our discussions with various fintech partners that there are certain fintechs who are wanting to do business in a responsible fashion, but some people want to see if there is something that they can do ahead of time in uh, in a pursuit to make sure that they give something new to the customer. This balance between innovation and what is actually responsible innovation is something which, as a banks, we have a very critical role to hold on to those innovations which may tread on a very thin borderline. That is one challenge which definitely banks will have to take care of, and even fintechs will also have to cooperate. And second thing, because some of these new interfaces, I mean, while the instruction coming to the bank is sufficiently secured, because like Murthy and other panelists also mentioned that most of our IT teams are geared up to make sure that the transactions coming to the data center of the bank are sufficiently monitored and made sure that no transaction comes to us without proper authorization. But what happens on the customer interface also is equally important, and that is where I think this new guidelines on digital payment security, which also covers the customer interfaces, which involves some kind of responsibility transfer to the fintechs, also has played a very good role in terms of making sure that the interfaces also are sufficiently covered.
Okay. Thanks. Saurav, you.
Okay, so when fintechs came in first, just go but little back in the history. So when fintech came in, right, so banks were a bit suspicious, right, and they were kind of Naveen was also trying to mention in a subtle way that they were not fully responsible in certain ways, right? So so that went for some time, and then banks saw that fintechs would be able to help them in spaces they could not foray before, right? So that led into a kind of a partnership model. But again, that is what is again responsible banking versus it has been mentioned again that banks represent trust, right? So that is something that cannot be compromised with. So given the fact that fintechs would be there and new innovations will be coming in, and India is kind of a innovative, fertile land. So we will be seeing a lot of innovations in the fintech space, and banks would be also supporting the fintech growth. That's what my take would be, right?
Okay. Thank you, Murthy.
See, I see fintechs as, advanced IT companies also doing financial business, right? They want to be in that space, and to, all credits to them. They have actually gone ahead and tapped the untapped markets. With the technology kind of reach they had, all kudos to them. They have changed the landscape. We have to accept that, they have done a great thing for the country as a whole, as the ecosystem as a whole, globally as well, right? And it's there on your fingertips. And today, if we have wallets at a Panwala and all, we should give the credit to them. They are the ones who have actually gone ahead, thought about it. Having said that, as Saurav rightly mentioned, when they launched, there was a little bit of uncertainty. What is happening? Will the share of the larger ecosystem of the banking system will go away or something like that? But as it went ahead, we all saw, as again he rightly mentioned, we all saw that it is all about a partnership. You will have to, partner with them. Those fintechs also need a big brother. Banks are the, legacy big brothers who you look up to. They need a partnership. They need a hand in hand to go. While the banks use their technology, because they have everything set, and the kind of reach they have, you have to use their vehicle and improve your business. It is a hand in hand which all the banks and fintechs have to look into and go in, go ahead. That's how I look at it. And from our perspective, we have been partnering with a lot of fintechs. That's the way I think all the banks and financial institutions have to look at. Don't look at them as a competition, or they will not be able to eat your pie, and you will not be able to really get onto the kind of technology reach they have, because we are into a different businesses altogether. Our end goal is different, their end goal is different. We'll have to make the best of both the worlds meet.
Okay. Thanks. Yeah. Sure. Please.
So just wanted to add one point, and I think there's a difference between digitization and digital transformation. And mostly these terms are actually used interchangeably, but these are not the same terms. So when you digitize, to have a website or an app is actually you're digitizing your business. But digital transformation is how do you embed technology in the culture of the enterprise, which also has a big business model. And we all heard about Holy Trinity, the Trinity God, right? Brahma, Vishnu, Mahesh. And if you talk about Brahma, who's the creator? So creator is nothing but the business models. We're talking about business models, which from where business gets germinated, it gets formed. Then you have the preserver. Preserver is nothing but a customer experience. If you don't offer a great customer experience, howsoever you might have a great business model, you'll not be able to preserve it. And then you have the holy god Mahesh, which is the destroyer. And that is actually the culture, if you don't change as per the changing fabric of the customer or the economy or the crisis like, we had in COVID, then you perish, you destruct. So while banks and fintechs, I mean, these are two entities because of regulatory aspects, but you actually see they're performing the same function. Today, banks are also like fintechs. Bank, if they're very technology driven, if they're focused on giving an amazing customer experience across this holy trinity that I spoke about, they're actually fintechs. So this word is now being used interchangeably. So how can you be a bank which is actually a true fintech is the most important into the hour when you can create a great customer experience. And customer experience is like you want abhi ke abhi, you want on demand, as I was saying few minutes back. At the midnight, can you interact with your bank? Can you be empowered to shop something? Can you get 1 lakh of rupees at 3 o'clock in the morning because you are at a particular hospital? So various customer needs which are today there around the clock, around the age brackets of consumers that we have in the country today. And mind you, India is the youngest economy in the globe. The customer that we have today, which is at the bulge, is the youngest customer, which is the millennial population of India, and they have very different needs. They basically, may wake up late. They may have a lot of, different needs. They don't want to own. They want to share. So hence, the entire business of financial services has to be completely digitized, has to be completely curated as per the needs of this young population which is coming in. And that's where you see a huge case of even the banks becoming fintechs. And again, if you don't have a particular technology, why to wait for that particular moment to make it happen? That's where a collaboration and a partnership comes. So, you can be the creator, you can be the preserver, and you can actually stop the destruction by either converting yourself as a fintech, a bank being a fintech, or maybe partner with any of the fintech companies. So that's another perspective which I thought is a great case for collaboration.
Excellent. That Holy Trinity analogy has been very well put, I would say. Okay, I'll come to another part of it. We touched upon initially on the customer experience part. What happens in banks is today the traditional old days physically going to branches, that's definitely over. Now we have a omni-channel mode of delivery. The customer can reach the banks physically, digitally, through social media, chatbots, and whatnot. So this omni-channel delivery model that brings also a challenge in terms of it's not just the technology in terms of the security, but other aspects. Say, a lot of times people get frustrated. The bots may be very particular because bots typically work with certain FAQs, but I have a specific issue which bots are not able to solve. So these are things in an omni-channel delivery model. These are the challenges. So one, how are banks looking at it? And I would add another part to this question: how effectively you are leveraging analytics and AI to do more predictive outcomes in as far as customers are concerned. Murthy, I'll start with you.
I think it's an interesting, thing. This the number of channels which you mentioned. I think they have been there from quite some time, right? They only keep increasing, right? Number of channels where you provide. One is mobile banking, the phone banking. These are all there, but what has got added to it is the AI ML part of it. Now, for example, when you call our call center, you actually don't press 1 2 3 4. You actually talk to the bot like you talk to Alexa or a Google Home, and you say what you want, etc. Right? And it starts conversing with you. What happens is this particular bot which is there, which is talking to you, starts learning, why you have called. When you call twice, thrice, it starts recognizing, my bot starts recognizing you. Last time you called for a credit card issue, is that what you want to, transact or, talk to me for? Or you let me know what you want. Then it actually predicts, right? That's the novelty and innovative. I feel good. Yeah, this bot remembers what I have called, and that's not a human doing it. Now, all said and done, there will be, as you rightly said, there will be something which the bot will not be able to do, and this guy really wants to go back to touch and feel, or hear a human voice. That will definitely be there, and finally says, no, I don't want to talk to you, I put me to a customer agent. Then this bot says, okay, fine, I'll put you to the human. They go back to the human, and they start conversing, in Hindi, English, Telugu, whatever language they want. That's the kind of they feel good. Okay, finally I'm talking to someone. But you keep providing channels, right? There are some millennials, they don't have the patience, right? They want everything on the phone right now, in few seconds. And if it is not working, they have no loyalty, they'll just switch over. And my biggest learners, always are my own kids. I get up in the morning and they tell me, this app is not, this functionality is because this doesn't work. Even they keep commenting on my own app. They keep giving the feedback. You have to keep hearing, because they are the ones who will drive the next generation. They are the ones who are looking into what is there in the market. You have to continuously keep listening to him. Don't ignore them. That, I get a lot of ideas from them. So they tell you what exactly you want. You have to keep servicing those kind of generation and clients. And I think that's the future for us. But having said that, these channels will be there, challenges will be there, but you will have to still go ahead and do it.
Exactly. Yes, sort of, both on this omni-channel as well as on the
Yeah.
analytics part of.
All right. So omni-channel, I think, has been covered. So from an omni-channel perspective, you have the various channels which has been there for some time now, and the experience is getting better and better on all the channels. So going forward, now with this digital banking initiative also, you will see another channel coming up with the same kind of experience that person would have, a customer would have. Now coming to the AI piece, so AI has been there since more than 70 years now, right? So only thing, because of the compute power that has increased phenomenally over the period of time, so you're getting these features on your devices, on the servers, which are now capable of processing huge amount of workloads. So that is the benefit from the AI piece. So AI, we can see the transactional data with the bank usually doesn't have in that context, the huge context of data which is required from providing a next best action or a next best option. So those are the things which a AI model would provide to a customer for the increasing in the marketing piece or the marketing area that the bank would want to indulge with. But going in this direction, engaging with a fintech will give you a huge amount of data in terms of the basket data, in terms of the skewed data, which will be enabling the banks to get into the next level of marketing. So that is something that we have to really look into and dwell how we can leverage that. Bank has got a considerable amount of data, definitely yes, and you can use a lot of analytics on top of that. I would not call it analytics; it's a kind of misused word or a site, so I'll call it data insights. So you get a lot of data insights from those activities, and you can do a lot of things with that, which are just scraping the top. We are not even there yet. So going forward, we'll have a lot of these coming ahead in our future course of the business.
Meaningful insights. May I say. Yes, Naveen.
So when we talk about this analytics, insights, and customers, so if you just go back to our old days, if you walk into a branch, most of the time branch manager probably knows that something is happening in your life, and they actually start the conversation with a context in their mind. When we are actually trying to put this analytics framework and all, I think it is very, very important for us to make sure that how will the system be given this particular context. In the example which Amol was mentioning, maybe if there is a call at 3 o'clock in the morning, it could be for two reasons. One is someone is actually booked a flight in the evening. That's the previous transaction which the system will have to refer to, whether the last credit card transaction was at an airport or was at a hospital. Based on that, probably the complete conversation itself is changing, right? So the giving context, or how do we actually continuously listen to various sets of information that is available within our ecosystem or outside our ecosystem with the consent. Of course, when we are talking about this context setting, it is also important to get sufficient consents from the customer so that the data privacy or any other aspects are not compromised. So when we talk about context and when we talk about analytics, context and consent will become very, very important for us to make sure that we do service in a very, very responsible fashion again.
Thanks. So, contextual insights and consent, two very important points that you mentioned. Yes, Amol, your point of view, I'd just like to add on that. You heard about the omnichannel delivery. How, as a fintech, you can help banks in perhaps improving that omnichannel customer delivery model and that experience for them?
So data is the new dollar for everyone today, and so banks basically have customer database, and fintechs can produce a lot of insights. I'll just talk about the way fintechs operate. So today, when you complete a customer journey and when you onboard a customer, you look at the picture of a customer. Today, there's enough data which is available to look at pictures in a different way. Like some people here are wearing specs, some people aren't. So, and everyone has a tendency to change your spectacles after a year, right? It might get broken, it might get warned of, and so on. So it creates a huge case, for example, to partner with a merchant like a lens card, wherein actually you can give curated offers to a customer right from the time that he got onboarded with you, and nudge him regularly that, hey, maybe you might require a glass change, and there is this particular offer into easy installments, into a good financing proposition, and can be given. You capture age and organization and designation of various customers that you onboard. Now, if a customer today is working in a technology setup, and all of us know about technology coming in a big way, a great resignation happening in the industry, and technology people aren't very available in any organization today. I know the age. I know that it would be an appraisal time. I know the person is having a XYZ designation. Why don't I create offers to that particular person, just before his appraisal becomes due, so that he can actually get a new skill and can upgrade his role within the organization, or look at, let's say, another job. So upskilling, educational courses for upskilling, or edtech becomes a huge use case for this. I know that today it's January, February time. It's insurance buying time. When people they submit for their investment proofs, and again you can curate various offers or nudge people to buy insurance. So there is enough of good life stage which is available with a particular fintech company. There is a lot of data in the age. There is a lot of data on the buying preference. If one would have bought an iPhone 11, and of course, today, no one holds a phone for more than 18 months or 2 years. Most of the people change. As soon as a new gadget gets launched, why don't we, give an offer for upgrade? So enough data which is available. And if, let's say, there is a bank or there is an entity which is not really able to create this customer experience for its customers to, every customer is aspirational. Customer wants to upgrade himself to everything new today. And as a bank, if you're not able to do that fast, your customer may end up going to another competition bank. And this, if the bank doesn't have an internal capability, actually can be curated through fintech platforms, which can help partner with the bank to create that aspirational journey, aspirational offers for every customer. So that's where, again, a bank and a fintech can really partner in a big way to create a happy customer and a retained customer.
Thanks. Thanks. Anyone from the audience has any question for any of the panelists? Okay, so then we'll just conclude, and 1 minute for each panelist. I'll start with you, Murthy. If we look for the ahead, a little bit of crystal ball gazing for the next 18 to 24 months, which will be the top priority on your digitization agenda, one activity that will be on the priority?
So there are quite a few activities which are going parallelly, so it is difficult to pinpoint. But for me, the top priority will be do-it-yourself journeys, which we are looking at. We don't want any intervention from our end where the client has to depend on us to become a client or transact with us. Everything has to be done by the end user by themselves, right from KYC to opening to the account to transacting. Everything should happen seamlessly. I will be happy if they don't come to me for anything, and they even don't talk to the relationship manager, but while we will go and talk to them. But that's how the seamless banking should happen, and that is a biggest priority for us.
Thanks, sir.
Yeah, to us, what I'll echo what Murthy had said. But to do that, we need to strengthen the entire journey from end to end, right? So the priority for us would be to strengthen our streamline our the entire journey, and one of the core pieces is the core banking system. The core banking system is a different animal altogether in this new age, still running the old monolithic kind of stuff, and we need to see how we can take it forward to the next level.
Yes.
So, if I have to just summarize the situation at which we are in, given that customer is getting very much involved, one way we are actually looking at customer needs with a microscope. That is one eye which is focusing on. And second thing is, we know things are changing fast. So the second eye is actually wearing a telescope and looking at what is going to come. So at an area where we are actually looking at with one eye on microscope and second eye on telescope, it's very, very difficult to see what is going to happen. But like people said, it's very important for us as a financial institutions, whether it is banks or fintechs, to move away from products and services and talk about solutions and customers and segments of businesses, so that we actually make sense to the people whom we are talking to, and they also see a value in what they are getting from these entities.
Amol.
So I think tomorrow's with so many people being chasing, so many merchants, banks, fintech players chasing the customers, and in the age of distraction, wherein you can't, interact with so many people, I think the core important perspective would be that if you want to serve your customer, you need to have the best of insights about your customer. What does he like? What's happening in his life stage? Is he getting into a new job? Is he becoming a parent? Is he having more responsibilities coming in? Is he going for the retirement? And track his life stage and carefully embed your finance in anything and everything that he buys, because that's the only way you can be his core. Otherwise, as my fellow panelists were saying, that there aren't any loyalties today. You can keep on switching in and out of any platform and you will not be stuck with one. So knowing your customer is very important, and offering him affordability across platforms is very important, whether on e-commerce, whether on travel, whether on various banking transactions. How can you be a part of his life with those insights, and how can you embed your finance in anything and everything that he buys? So that's the most important thing, which I think would rule the BFSI space in the longest run.
Thanks, Amol. With that, we'll conclude this first panel discussion. And before we disperse, I would like to recognize all of them have been technology leaders in the financial space, and in a recognition of their efforts with our Financial Leadership Awards. And for that, may I request Shangomitra Mohanty, our co-founder of APAC News Network, to hand over the Leadership Awards. Mr. KRC Murthy, Saurabh Datta. Okay. Saurabh. Thank you. Thanks, gentlemen, for that wonderful discussion. And if I may request all the panelists, there are this expo happening, and if you can have a look at and go through the expo, there might be a certain different kind of financial solution. So for the next session, this is an industry session, and I'd like to welcome on stage Mr. Prinzal Parikh, the Chief Executive Business Officer of Pinnacle Teleservices. Prinzal.
I would say thanks, Rajnish, and I think a lot of things which came out of the earlier session are really exciting. I wished I would have not got my presentation. I would have just carried on the discussion which panelists made. I think it was really interesting, good insights, and I would probably say the theme which I'm trying to present continues in the same direction. Slot which I have is 15 minutes. It's tough for is what we are speaking. Journey to privileged and unprivileged customers, right? So that's I think is one of the key aspects where you find your next billion customers. Uh, One point which came up by Rajneesh was the channels are going unlimited, right? But then there is a customer who only wants to be more, I would say, focused on a channel and be less intrusive. How do we focus that is what we are solving. And I think one point which should be eye of everyone is how are you building your communications when the journey of Web3 is getting built up, right? That's the point that we are gonna touch across. I think numbers are more or less known to everyone, right? Internet penetration has increased, but if you still focus, you cannot have focus. You cannot build a product which is purely focusing on digitization. You will still have a lag, which is your next billion customers. Where are they coming from, and how do you enable that? Okay, so when what we do in Pinnacle is we don't only enable you with platforms which are next gen platforms, for example, WhatsApp and voice bots, but we also bring you with channels which will allow you to connect to people who have been facing challenges to adopt those technologies. That's one area that interestingly, we build a bridge between both of them, ensuring that it works in a way where you can have a platform which has got digital approach and which has got the digital transformation approach in it. That's one thing that we are putting up across. Uh, just to take an example of it, while UPI has been one of the most encouraging things that we speak when we speak about India, but let us also agree, when we spoke to the director of NPCI, he says that principal, we have a challenge of a set of customers who are still not served with UPI. And the next launch that we see is how do you enable your customers on mobile phones which are not smart to get into this, right? And that's probably one of the areas where Pinnacle can again support up. The other thing that builds up is just imagine the way things have been, right? In the burst of .coms, you have gone for creating a space which was internet banking. You moved to mobile banking, and interestingly, now you've got WhatsApp banking. But is this the end, or is it only refurbishing further and further? I think things are changing, right? You again going to the channel thing. You will have to have phone banking, which is now automated, which is completely your bot based. You will have to have whatever you build across whatever channels. You will have to have a unified data privacy and a security stack which gets built up across. The interesting thing is now you will have to focus on customer experience, which says that you will have to have decision making on the go, right? So one point which comes very constant, saying that whatever you build has to end when the customer sees, right? So that's an area that we help you to plug in. Pinnacle serves more than 14 plus channels. When I speak about India, globally it's more than 34 channels which goes in. But when we speak these numbers, let us agree, a few channels where customers have been hopping up large are WhatsApp, Meta, Insta, Bucket, VoiceBot, and Google RCS, right? So that's where we come in. The problem that I solve today when we speak to our clients around banking, finance, insurance, and probably the lending industry is that from .com, we help you to transit over app. Now, when you have app, you have communication channel, which is more on notifications, but notification has got a single click in every mobile which says clear all. So there's nothing which actually gets communicated, right? So how do you solve that? Is using our several channels, which is again around messaging, personalization messaging, and probably WhatsApp bot. The other thing, interesting thing which we solve is we help you to identify your new customers, right? So the model on which the entire platform works is we allow you to discover your customers beyond the Meta and the Google platforms. Okay, that's one area. We help you to identify a competition customer. We help you to identify customers, as we said, who are transiting through different journeys of life. Okay, that's one area where we help you to discover your customers. And interestingly, this discovery does not only happens in a format of reaching them out, but probably connecting them also, which is once you have the mobile number, which I think is the biggest marketing asset which a banker or an insurance sector develops. I think we help you to connect over various channels over there, and then keep them engaged, because not every customer that you connect gets converted into your actual customer, right? So lead to customer conversion, you have to do reach earning. That's where we come in place. Just to give you an approximate size, we handle close to 75 billion transactions a year. Okay, so that gives you a fair idea on how we build things. One common example, which I would say, which this slide is more inspired by last week, what Mark Zuckerberg said in terms of his new product launch, which we allow you to offer to your customers now, is that don't let your customers end up on landing page. So what happens is, let's say when you talk about a millennial, he goes through an Instagram ad, puts in his data in a landing page, and you call him next day 10 to 6 in the morning, because that's how your call center works, right? What are we trying to change is, we are saying is don't go on landing pages. We enable you with direct conclusions on WhatsApp. Okay, start a conversation. If you are not on WhatsApp, I understand there are technology challenges which are yet you are getting prepared for it. There's a stack that you are still solving. We can probably minimize the journey over voice bots. Okay, the customer conversations happens immediately. We have solved this problem for large brands, which would need no introduction by in space of commerce, in space of banking. I think that's an area where we would like to connect. Okay, so we are saying is again, and everything that we do, okay, interestingly happens with a verified identity. So when you now reach out to your customers, is not by a fraud call or not by a spam call, it happens with the brand call. I think that's the difference that we create. One offer which Shomik, when we came on the board, he said is, while there are customers around BFSI, I would wish saying that if you can offer them something. So we are saying is, we are probably putting up across here offers which allows you to probably experiment over platforms, build something that you want and desire. We are not getting into any customization approach, or probably saying that we'll take some development time and cost around things. We are more than ready to invest and partner you. How do we do this? Is with this beautiful team that we have. Nonetheless, when we move up ahead, banking has this point of what are the certifications that you go across? How do you maintain our security standards? Pinnacle does that. A small summary of what we do: messaging, WhatsApp, voice bots. I think that's all from our end. Any questions? More than happy to address. Else, we can conclude. Done? Thank you. कितना मिनट हुआ था? 8 मिनट 10 ले लो भाई.
Thanks, Mr. Prinsal Parikh, Chief Executive Business Officer, Pinnacle Trail Services. Sorry, if you can come on stage for once, sir, because we have to hand over the souvenir to you. Mr. Prinsal, can you come on stage, please, for once? Yeah. I'll request Mr. Rajneesh to hand over the souvenir to you. Thank you so much. Thank you so much. So with this we move to the next panel discussion that will be on the insurance sector, reinventing customer engagement through business automation by insurance providers. And for that, again, we have eminent speakers, the digital transformation leaders from the insurance sectors here with us. Let me invite Mr. S.V. Sundar Krishnan, Chief Risk Officer, Reliance Nippon Life Insurance Company Limited. A huge round of applause for him, please. We welcome Mr. Sundar. Let me invite Mr. Jasmeet Singh, Chief Risk Officer, Reliance General Insurance. We welcome you, sir. We have with us Ms. Anjana Rao, Chief Strategy Officer, India First Life Insurance Company Limited. Anjana Rao, we welcome you. We have with us Priya Gilbil, Chief Operating Officer, Manipal Cigna Health Insurance. We welcome you, ma'am. We have with us Mr. Abhishek Gupta, Chief Marketing Officer, Edelweiss Tokyo Life Insurance. We welcome Mr. Abhishek. Thank you so much for joining us today. We have with us Mr. Ajish Kumar, Assistant Vice President and Vertical Head, Customer Service, Bajaj Alliance General Insurance Company. Can we have more chairs on the stage, please? And we have with us Mr. Yashish Sampath, Senior Vice President and Head, Affinity and Association, Gallagher Insurance Brokers Private Limited. So you can also, it's a star-studded panel from the insurance sector. Let me hand over the session to Mr. Rajneesh Dey, Consulting Editor of APAC News Network. He'll be moderating this session. Over to you, Mr. Rajneesh.
Thank you, Shobik. So I think I'll stand here. That would be perhaps better. So as Shobik rightly mentioned, we have a very star-studded panel today. And what we would like to talk and focus on how basically digitization or automation is being used to reinforce the customer experience and customer engagement. For an insurance sector, perhaps we can break it up into three: customer acquisition, customer engagement, and then further enhancement of the customer experience. That we can break up the insurance life cycle maybe. And that's where what we are trying to focus on, how automation would help in each of these phases of the overall insurance life cycle. So the first question common to all the panelists, and I'll start with you, Sundar. What are the digital technologies that insurance companies are basically focusing on for enhancing their customer experience? That can be in terms of developing products, claims assessment, or whichever process, but one focus area, and maybe I would request each panelist to take 2 minutes on this and focus on one priority area where maximum automation or digitization is happening. Sundar.
Yeah. As you may be aware, the digital transformation is happening in BFSI space last 6-7 years. I think most companies or almost all companies have fallen into the digitization pathway. And so the acquisition now is faster. What used to be maybe many visits is probably faster in online real time if it's online, and if it's not online, it's more assisted sale, assisted through digital devices. It could be a web camera, it could be a mobile, it could be a application, it could be a laptop. So the sales managers are better equipped, and acquisition happens faster in the sense that you're able to see the customer digitally. You're able to do video-based identification. You're able to do a video-based underwriting. MER reports are run, and with IoTs, you're able to even get various reports. So that's the acquisition route. It's faster. And on the customer side, of course, the customer has access to lots of information digitally. You're able to compare products, you're able to compare features, you're able to compare benefits, and you're able to choose the right product which you require for your needs. And this is also ensured through telecalling the customer, or video-based calling the customer, and ensuring that the customer is buying what actually the customer wants for a long term. And this is the key focus area. And there were lots of mis-selling complaints and apprehensions before, say 10 years back, which has been thwarted through digital acquisition and through various controls, video-based controls, and also through mobile controls, or where you are able to see the customer, whether the customer is healthy and the needs are met, etc. So that's the change that has happened. And then once the customer is onboarded, then you have information about the customer through an identification system, through accesses to various databases, and then you're able to map the customer to a particular criteria, particular risk, particular region, and then you attend to the needs of the customer. So the delivery needs are also thought through well and met digitally. And that's the transformation that has happened in both acquisition and delivery routes. And then, of course, the persistency and propagation of the customer experience for long term. If it's a life insurance, if it's a general or health, it's a one-time purchase. Then also you have to tap back to the customer after the year if the need is there. And so all the three routes, acquisition, delivery, and persistency of the customer in all spheres, is met digitally. Use of accesses to databases, lots of video surveillances, a lot of mobile surveillances, and the artificial intelligence, machine learning, and other systems that are there are helping the cause of creating databases of customers. You're able to access database of customers from a repository, data repository, and then you're able to understand the needs of the customer, also behavior of the customer, also where the customer has gone, what kind of products the customer has bought. And so you're able to map all these elements digitally today through use of apps, through use of various resources, and through a very good scanning process. So what used to take months, what used to take days, and then what used to take probably hours is now instantly done. And that's the change that is digitalization has brought about, and on all angles, even on risk and compliance angles, because there is lots of video surveillance that happens now online real time. I just bought a product of a private insurer, not my company, but was very pleasantly surprised. It was assisted sale through an agent, but there were SMS questions, and then there was a video surveillance.
We'll take that up
Sure, yeah.
the later round. So, as I requested, maybe each panelist just one brief point. This is more as a starter, and we will take up the specific issues later. Jasmeet, I'll come to you next. One prioritization of the priority area in digitization that you feel insurance sector has done.
Okay, I think, so I'll just take it forward from where Sundar left. So I think, he's covered it exhaustively, but still, I think of 2 decades in the general insurance domain. The biggest thing, transformation, which I have really observed and we are experiencing on a daily basis is from a proposal form, which was manual, a manual cover note, to a, seamless process, which has got created now. I think I would talk about primarily on the experience of the customer. Insurance always was seen as a push product, whereby you had an agent, you had a traditional model of selling, whereby, it was quite a number of visits which would have really taken to kind of conclude one deal. Look at the number of policies which are being underwritten now. It is practically impossible if you do not have a digital backup. And more so, I think, we should not just look at the acquisition part. I would also talk about, the end of part, which is primarily very, very important, for which the customer is actually engaging with you, is the claims experience. Now, none of us are in the business of insurance. We are all in the business of claims. Unless until we are able to justify and satisfy at the time of the need, I think everything else is futile. Whatever great we may do, if at the end of the day the customer does not get what he deserves, I think all processes, all digitalization has failed. That's how we kind of see it. So I think, just kind of summarizing on the overall aspects in terms of initiatives, I think introducing a lot of bots. Now, today, bots is one technology which I think is overtaking a lot of things. Today, we have bots which kind of take care of end-to-end seamless transition. We have pre-underwritten stories in case if somebody's got a pre-existing disease, hypertension, diabetes. Earlier, it used to be a laundry list of medical tests to do to kind of really get a customer onboarded. Today, we have absolutely no manual intervention. It's a website. You go, there are just fill in the details, whatever pre-existing diseases you have. The system will auto-calculate the loadings in case if any, will give you the pricing. You are through, you can buy the policy and you're covered for your pre-existing as per the limitation period, so on and so forth. So I think the mindset is absolutely changing in terms of the overall transition, the way, the insurance sector is really moving forward to.
Okay, yeah. Thank you. Anjana, next I'll come to you. Your priority focus.
Sure. Am I audible? Okay. So I would concur and echo with my co-panelists here. So use of mobile technology for, so we all spoke about assisted sales. Assisted sales now is, I would say most of the insurance companies have a paperless acquisition process, and that is because of use of mobile technology, building most of the forms on the handheld devices and empowering the sales. And almost everybody has come up with robust sales platform which is empowering the field sales and is also helping the customer experience to be enhanced. Extending that to the back-end processes, the whole focus has been as to how do I go ahead with a zero ops kind of a design, and making sure that underwriting decision, why should it happen after the proposal gets submitted? Why can't it happen at the point of sale? So again, that is another transformation.
Okay.
And customer engagement was always there. I think coupling customer engagement with data to make it more personalized or hyper personalized has been the shift in focus.
Okay, so the paperless customer acquisition, Priya, next, I'll come to you. And in terms of the preferred approach for insurance companies as far as digital transformation is concerned, maybe if I ask you to highlight one key focus area there.
Sure, sure. Thank you. Thank you to APAC News Network and the August gathering here. Great pleasure to be here. Today's age and time, the era is about customer equity. Gone are the days where the consumer is going to compare us for a particular category, for a particular industry, and then have expectations. It's about comparing with the best possible service, delivery across various sectors, and that's where consumer focus and innovation around that and digitization of the entire back end and front end operations. As Anjana mentioned, not only selling digitally paperless, but also servicing. That's going to be a very important focus areas for all of us as insurers. And most importantly, there's a lot of innovation and liberalization, as we know. The regulator is coming up with that product innovation, creating digital ecosystem and creating a connected network to really fulfill those needs in the vogue of simplified and ease of service for the consumer is the most important aspect that we all are focusing upon and trying and driving innovation. Thank you.
Okay. Thanks. Next, Abhishek, your priority.
In addition to what my fellow panelists have said, I will just touch upon one topic. In life insurance industry, specifically to life insurance, more than 85% of sales happen what we call as assisted selling. That means there is somebody who is assisting customers in taking up the required plan. And most of the time, this assistance is in form of a physical person, what we typically call as an agent, or it's a bank employee or somebody else. And most of these people have been used to selling insurance by meeting the customers face to face. And suddenly the pandemic actually threw that face-to-face interaction out of the equation. So one major shift that the entire life insurance industry did, assisted hugely by technology, is how do I shift these people? How do I shift their mindset? That is number one. And number two is how do I enable them so that they are able to service the customers, handle the customers in a digital mode. So a lot of focus from life insurance industry, including our organization, has been done in creating tools, in creating infrastructure for these people, because ultimately, while we are talking about offering a superior consumer experience, these people are the carriers of those experience.
Sure.
So what we have done and the industry has done is enable these people, and their tech has really helped us.
Okay, that's again the overall, I may say, if we look at the overall insurance ecosystem, they are one of the important stakeholders in there, and you are by through means of automation empowering them further. Ajesh, I'll come to you next. Again, your point of view.
Sure. Good morning. I guess pretty much everyone has summed it up. Just to start with, the goal is to meet customers' expectation, which has also evolved. All this while when we saw this digital transformation. In our previous panel discussion, Mr. Murthy touched upon millennials and Gen Z coming as our customers. Their expectation is totally different. So how do we meet their expectation? Obviously digital is the new era, but if I just step behind and think what attributes to, or rather what are my value drivers for this digital transformation would be: one, scalability and sustainability. We've often seen the solution getting changed within a year. That should not be the case. When I say scalable, don't think of your customer base as on today. Think of your customer base 10 years down the line. Your system should be scalable, sustainable, of course. And second point is the speed and agility. We have seen in last 2 years in pandemic, many companies have met their digital targets, which was met to be, or rather planned to be met in 5 years. they met in 1 year. The third one for me would be the cost. The technology which you adopt should not hit your P&L very hard. So obviously your ROI should be in less than a year. I would sum it up with a use case what we do in our company. So we have something called as motor OTS. So in case customer meets with an accident, and what they have to do is just go to our app, update the details, click some photos, and just submit. What the app AI engine does is, it analyzes the entire piece. It gives, and with the help of AI and photogrammetry, it gives a code to customer agrees the code, the claim gets settled in 20 minutes. Like Mr. Sundar mentioned, what was like weeks, days, now happens within like hours, or rather minutes. 20 minutes claim settlement from the time the accident is done. That's the kind of digitalization has helped us in today.
Okay. Uh, Yashish, uh, I'd like to talk a little bit on the intermediaries and that aspect very briefly. If you can mention the focus on digitization, what has happened.
Thanks, APAC News Network, for inviting. It's a very interesting topic for the panel discussion, and especially COVID brought about a revolution in the way digitally insurance has been distributed, more of general insurance. And predominantly, the so called insurtech or the broker tech players in India and insurance companies also really upgraded themselves to make the purchase and the ease of convenience very, very simple for the end consumer. In COVID times, where the entire country was thinking whether we should have any insurance or not, sitting within your homes, you could buy a policy within minutes. To add to it, as my colleagues from general insurance industry mentioned, the experience in general insurance had been more of a consumer had to chase a company, chase his intermediary for the claims, and then run from pillar to post, which was a story few years back. But now, due to the digitalization of insurance, and especially the intermediaries also have heavily invested in bringing upon systems, technologies, which allow even a tier 3 or a tier 4 consumer who does not understand the I to E of insurances, also in the most simplest way, to submit his documents and get the claims, whether it be a health claim, whether it be a motor claim, in 20 minutes, 10 minutes, or few minutes. And I think the way forward, in fact, a couple of days back, there was a big summit of IRDAI in Bangalore, where the IRDA chairman also mentioned that technology will play a very, very big role to make India 100% insurance wish list by 2047. And there are a lot of regulations which have just come up, which are favoring intermediaries and insurers to come up with more of ease of buying, of convenience of products, and making even embedded insurances very much a true reality in India.
Okay. Thank you. In fact, some of these regulation and compliances will take up in one of the subsequent rounds. Now, I'll come to one important aspect of it is, one, the accuracy of the claims processing itself. One, how can technology help, is helping in enhancing that accuracy. And one is accuracy and other is the timeliness. In a lot of cases, what happens is the claims, the timeliness. So in terms of timeliness and accuracy, how can technology help in this claims processing that in any case will help in customer experience enhancement? Yes, please go ahead.
So I think what has happened is the use of analytics actually to treat claims. If I remember rightly, 8 or 10 years back, the settlement ratio was lesser, 93 or something like that, or even 86, 87. And now today, our settlement ratio is 99, and the TATs have reduced, and it's much faster settlement. I think the change is because of use of digitization, use of assets, use of data. And so with analytics, you're able to prove that this is the customer who is met with the who has the problem or the claim to be death claim maybe. And so you're able to connect to the customer's database, you're able to place the customer, you're able to connect the family, you're able to connect the nominee, and it's much faster. The investigations are much faster if it is early claim. And early claims also were very high and it's come down. It was 35%, now it's come down to 12-13%. So things have improved on the claims front a lot because of use of digitization and use of analytics and use of databases of repositories. So faster investigation, faster reach to customer, faster claim settlement process, speedier process, and more claims settled from 85 or 93 to now 99. So this transformation I've actually seen last 8 years or so. If you 8 or 7 years back, we had lots of frauds. The claim ratio used to be 180%, 200%, and 230, and things like that in various products, different products. Then we used analytics. We removed dead man insurance. Dead man was a big problem. So the moment we got the biotech or fingerprint or something of the customer, we were able to see the customer when the customer had taken the policy and then had captured photographs, etc. So dead man insurance was removed automatically. Then there was a problem of higher age, people with 85 being insured as 65 or 64. We had problems on that, and then we had problems on the sickness, people with cancer being insured or something like that, but not disclosed beforehand to the insurance company. So slowly, with the use of analytics, we have ensured that through regression, we find out customers who are fraudulent and cancel the policies much beforehand. And therefore, the settlement ratio gets better at the claim side. And it's much faster and speedier and happier. So
I understand. So it also helped in reducing the churn. So this is an open question. Anyone in the... Yes, sir.
So I think,
Yes, he's adding after that. You please take it up. Yeah.
so I think, again, I'll give a perspective on the general insurance aspect where you have a bouquet of products. So, unlike maybe, a human being or a health or a, death or a PA kind of a claim, you have, marine, you have fire, you have liability, and so on and so forth. So the challenge with the GI industry, which used to be, when we talk about the claims experience and really seamlessly how we've kind of done the transition, I'll touch on three parts. One is, your frauds and exaggeration. So I would keep them little different. So an exaggeration is something whereby, for example, that, I had some scratches, some damages on my car, and there's an accident which is, say, there's a frontal impact, and I try to kind of cover up my side, damages or back damages or some other unrelated damages along with that claim. So, those kind of things used to really kind of take a different kind of dimension earlier, when the physical surveyor used to go really see, and I think my fellow colleague mentioned, whereby, now it is just that you click the photograph, we have an AI tool, the tool can actually run with the narration that in a single impact, which all parts of the car can really get damaged and which really cannot get damaged in this kind of an accident. So you can exclude those immediately and educate the customer that maybe if he wants that to be covered, it's a separate claim. Maybe if he has missed to inform in the past and he's been a renewal customer, a long-time relationship, that again gets looked upon case-to-case basis. On the health side, I think what we've done very, very exclusively is we've done a nano micro management with data analytics. So today, we get a lot of pharmacy bills, we'll get a lot of hospital bills. We've made it so seamless that, the biggest challenge in a health claim is when you go to the hospital, you have a cashless treatment, everything is there, or even if it is a reimbursement, the documentation part really takes a lot of time. And for a customer, it becomes very difficult, that whether I focus on my patient who's kind of lying there or I really run after the documentation part of the hospital and the insurance company. So what we've done is, at least, which is an ongoing process, and we are integrating with the hospitals that, there's a seamless document flow and the customer has zero role to play in. And within minutes and hours, you can kind of, give approvals and move forward. And the system is intelligent enough to do nano scoring modeling, which typically means that you have an illness, what are the typical medications which should be prescribed, which will get critically monetized that, okay, this, suppose I am a flu patient and maybe a cancer medicine is being given to me, it will immediately highlight that this medicine is not related to this treatment. So there is something wrong, then there's a trigger, and then eventually it flows into the investigation buckets and so on and so forth. So I think intention is very clearly that the genuine customers should not suffer, and obviously the fraudsters should not be given a leeway to kind of take advantage. So data analytics really plays a very, very fundamental role in controlling these aspects.
Okay, so the importance of analytics, yeah, Priya.
I just wanted to add to what Jasmeet mentioned. As a health insurance company, I mean, I represent the health, segment. Our prerogative is to really have seamless claims and instant claim processing and accurate claim processing and timeliness, as you mentioned. These are the core competence or core service levels a customer would be expecting when he or she buys insurance. Now, talking about Indian health insurance and health ecosystem, unfortunately, the data is not digitized. You have a complex, process of documentation, bill digitization, and thereby followed with adjudication. So basically, there is a lot of innovation happening in the industry. There is standardization norms being set. There is a company or a body being set for an electronic data interface, like the West, where you have digitized billing input. You had digitized claim processing adjudication protocols. Both are married with analytics and scoring models, and basis that you have instant decision making.
If I may interrupt, what's interesting to know, if we look at the IT maturity curve of insurance and healthcare, there's a vast gap. Insurance is definitely much higher on the IT maturity curve, and unfortunately, our healthcare system is not. The hospitals is not. That's perhaps one of the reasons why that documentation, the timing, and everything don't match.
I would say innovation and digital, kind of advancement is happening on both sides, but it is not in sync with the common objective, right? I mean, healthcare is innovating, and there's a lot of disruption happening on that side as well. Their prerogative is customer, focused. How do you really marry the two and have, a common play and a common ground is
Another
what is
challenge
important.
in that marriage between the two, won't it be the regulations? Again, there are both the sectors are heavily regulated.
So as you know, there is no healthcare regulator in India. I mean, that's one of the biggest area, that the country needs to focus upon. While there is a, health insurance regulator, however, mandating certain rules and guidelines of the hospitals and healthcare providers becomes very, very tough. So coming back to the point on timeliness and accuracy, like the West, those are areas and protocols being defined. And as some of the fellow colleagues were mentioning, we have come up, Manipan Signa as a company, we've come up with a, fraud rule engine and machine learning model, where you basically, our prerogative is to pay all genuine claims as per contract, as fastest as possible and as accurate as per the term of the contract. So with this, scoring model, you really delineate the one where there is propensity of, abuse and fraud, and the ones which are genuine, and, fast track the genuine payments. Similar to that, the Jasmeet mentioned, I think, about small pharmacy bill. You have OPD, kind of mechanism. So how do you really get that whole complexity of billing, adjudication and digital entry? And how do you really automate it is really the answer. Some of us have actually put in a rule engine and based on, back-end data scoring regression model, where certain protocols, certain surgeries, certain, clinical guidelines can be straight passed through, and instantly the claim is paid, the moments we get the, adjudication request from the hospital. So those are, innovations that are happening in the industry. And with that, we should address that, kind of requirement of timeliness of claim as well as accuracy. I just wanted to add that bit.
Sure. So anyone would like to add? Yes, Jana.
Life insurance perspective. So, in life insurance, the primary challenge, I would say, so while you can put in all the efforts to fast track whenever a claim gets notified, how do I scrutinize the documents without any wait period? But one challenge which we face even today, which we are trying to overcome, but that will happen only when, like, a death certificate. A death certificate today is not standardized, it's not digitized. So, I mean, even if you want to automate, you need to have some manual intervention where you need to read through the death certificate, you need to understand whether it is a genuine document, not a genuine document, and then process. Otherwise, the whole intent is the process is whenever a claim notification comes in, how quickly can I, so use of bots to read, minimize the wait time. After a claim is processed, how instantly without a wait, how the money can hit the bank account. The wait time is where claims go for the due diligence bucket or reading the death certificates. So that is one area which is still a struggle, is what I would say.
Okay. Let's take up another issue on the, we talked about data compliance. Another issue is the data privacy, especially, and we know there are still a lot of ambiguities in Indian context, unlike in developed countries. The privacy is very, but for insurance industry, the privacy thing has to be taken care of. So what are the primary challenges as far as conforming to compliances and the data privacy is concerned, and how are insurance companies looking to handle it? Yes, sir.
So the expectations from a privacy regulation is that you sensitize the customer, how you're going to use the information that the customer has supplied, one. Two, you inform the customer in advance to which parties or partners or vendors you're going to transfer the information of the customer. Three, you inform the customer in advance when you would destroy the data of the customer. Four, the consent, what the currently is for being followed is just a tick in a application form where we have these clauses and the customer ticks that clauses or signs that clauses. Sometimes even signatures are in the end of the form. So customer doesn't clearly understand what is he consenting to, what is the undertaking that he's signing. Because at the end of the day, the salesman says, you sign here and then that's it. He gives the check. So he or she gives the check. So the whole process of consent seeking will go elaborate. So with digitalization, you could actually give pictures, you could actually give symbols, you could actually give examples of how the customer data is going to be used, to which vendors it's going to be passed, for how long the data is going to be kept, and how the company would inform the customer every stage that, yes, I'm transferring the data that you have given me to this vendor for this purpose. Hope you do not have an objection. Because customer can change his or her mind later also. So this is the whole privacy process. And this process would have to be elaborate, demonstrated, evidenced in terms of documentation. So the documentation requirement would go up a lot. You will have to couple that with digitization where you explain the customer the process clearly with diagrams, illustrations, and things like that. And at each stage, you'll have to inform the customer through SMS, email, and other means to ensure that customer is understood what is being done with the information that the customer has given.
Thanks.
So this is the change.
Anyone would like? Yes.
So I will say that first, foremost thing is winning the trust of the consumer to make him share his data, because that's the biggest mindset issue of an Indian consumer today. That if I'm giving my data, I'll be bombarded with n number of calls and SMSs and emails for people pushing for insurance, which unfortunately is not the case, but for few intermediaries who go overboard. Secondly, it is very important today for a consumer, whether it's a corporate today in our business of insurance broking, there are strict and stringent NDAs which we execute with our partners, our corporate customers, where confidential data of names, spouses, their salaries, their designations, and some ailments, prior histories are being shared. And that is something which today any corporate would be very, very particular that if he has to share it, it is not being misused, because these are extremely confidential data. Secondly, in terms of the right data of an end consumer to come, it is very important, either it's an individual customer or a corporate, to make him understand that by giving the right sort of data, you are only going to help yourself when the moment of claim arises. Because at that moment, if you don't have his genuine email ID, you don't have his genuine mobile number, and you have just the corporate HR or the intermediaries mobile number, which today still is a practice in India. Intermediaries still prefer to give their own email IDs and phone numbers to be contacted to protect their renewal. If we try to break that myth and make a consumer share his right data and educate to him how his experience at the claim will be better, I think that will be one of the biggest challenges for us all into the insurance sector to make it possible.
Okay, thanks.
I just wanted to add to it with the account aggregators coming in, while it is a very safe and secure form, consent based, seeking customers' consent before sharing the data with any of the information users, so to say, how much is the customer aware of the account aggregator as an entity, and hence driving some awareness with the customers that I mean, this entity is there and this is here to safeguard your data. That socialization has to happen so that they don't mind giving a consent to share the data.
Sure. Yeah, Abhishek.
Abhishek, I'll take this one. So Abhishek and we have worked closely together in our Edelweiss stint and his earlier stint also, where Abhishek was heading a mobile store business, okay, of India. And that was one of the biggest challenges which I and Abhishek were trying to solve way back when no digitalization of insurance claims and all had started in India 2014-15. And we were doing the mobile insurances businesses for mobile store in India. And the biggest challenge was that end consumer never used to know the terms and conditions which he used to buy the insurance from the outlet. And the right set of data awareness to educate to him about what the policy is covering and where he has to go and claim for his simple 4,000-5,000 rupees mobile claim was one of the key things which we could solve together. And the customer satisfaction index was at the level best in India after we tried to educate and create awareness that how to claim, what your policy covers, and what it does not cover.
I'm not sure if that awareness is still improved, maybe improved since 2014-15, but still, I don't know how many people read the fine print.
No, nobody does, but I think thanks, Yashesh, for taking back to those days. Yes, you are right. Nobody reads terms and conditions, and therefore there's tendency on the on the companies like insurers or anybody else to probably de-risk themselves by hiding behind those terms of conditions. So that exists. Coming back to the point that you asked about data privacy, as life insurance companies, we have access to the most sensitive data of the customer. One is the financial data, and second is the health data. These are the two most sensitive information. Um, you know, the best way, or probably I'm not sure it's the best way, but what we try to do is, number one is encrypt that data so that it is not accessible internally also, and to very select few people within the organization. Second, yes, there are a lot of security measures built in that data doesn't leak out. However, at the same time, it is in line with what I talked about earlier, that a lot of insurance selling is done by third party, which are the distributors. So a lot of work needs to be done on sensitization. While we are talking about technology, we are talking about the various tools which are available. I think it's a culture that to respect the data that the consumer has entrusted you with. And there I still think there's a lot of ground to be covered,
That's a cultural issue, I'm sure, throughout India. That's there. Okay, so we'll take up another point, and again, maybe I'll start with you, Ajesh. In terms of, we are talking about, which Abhishek just mentioned, sensitizing, and then the third party players are also coming, so the whole distributor ecosystem. Now, this whole ecosystem in an insurance, there are still some legacy infrastructure. In some cases, a lot of insurance companies have built their own digital platforms. And in some cases, there are technology solution providers they are partnering with and using. So what's the preferred mode, or is it a hybrid mode that is working? How are the things shaping up?
Okay. So as for me, it will depend on the company dynamics and your business case or a use case, what you want to drive. For me, if you ask me, it will be a mix of two, which is you take a standard package and then customize and personalize it as per your business case. The benefit what you will get out of this is, since it's a standard package, one is it is tried and tested. Okay. Second benefit what you get is that the risk or the speed in which it can be implemented. Since this has been implemented in a lot of places, your speed becomes key. You can get it implemented soon. Third is the cost. Since it's not a proprietary system and it's a standard package, the cost gets shared between different insurers, so you get a better deal.
Okay. Yes.
So I think, this is a question which has to be seen in perspective. I think a large organization, a startup, a small organization, a mid-sized organization, I think the strategy would really depend on what scale you are in. Now, there are organizations which are existing for 20 years, who've created their own data warehouses and, everything in-house and, like VK on-premise servers and everything. Now, immediately kind of moving on to say a cloud, may not be the right strategy, because at the end of the day you invested so much of cost, and at the
True.
end of the day you also have to kind of bring in a better hybrid structure whereby the obsolescence has to be taken care of. You can't really run with obsolete systems as well. So I think it's a transition, it's a journey whereby certain things you will always want to keep on prem, and certain you would obviously want to go on cloud. Certain applications which you will have to kind of outsource, like say SAP and stuff, which have really kind of overtaken the markets, and it's more like a standard software which has got created. But on the application side, say from a customer experience or from your own digitalization perspective, you may want to kind of develop your own applications, your own systems, to bring in again exclusivity A to your proposition. B, I think speed and accuracy is again a debatable topic, but when you're developing it in-house, you've got better controls to kind of get speedy deliveries and better controls. But again, you'll have to see the risk reward performance. I mean, it should not be so that you're investing so much of money that eventually the returns are not something which justify. So I think it's more like a mixed strategy, which will depend organization to
So
organization.
balance between outsourcing and on-premise. Yeah, Priya.
Just to add to what everybody has mentioned, and clearly it's a combination, it's a hybrid. So you have legacy systems and you have your own experience and expertise garnered over years that you've developed. Building on that, but at the same time keeping pace with what innovation is happening in the industry, what are the newer use cases, trying and learning and maybe using those utilities. And third most important thing is the ecosystem. So if at all people have expertise, and there are large innovations, a lot of innovation happening by the startups and fintechs, insurtechs. So how do you really use their services to really complement your own in-house homegrown IT systems and technology? Maybe a hybrid, off the shelf buy, at the same time connecting
Okay.
it through the ecosystem. A combination is the real answer, and risk and reward most importantly. And most importantly again, how is the consumer, how are you solving the consumer problem through all of
That's
this? Because it
paramount,
has to
I
be
think.
not inside out but outside in at the
Exactly.
end of the day for you to really run your businesses.
Sure.
I agree completely with Priya. So it's all about what is the business problem that you want to solve, and whether it is a product or whether it is going to be bespoke comes later on. What's the problem that you want to solve with which technology? So there's so many emerging technologies. Not everybody has a canned out of the box product available. So let's say one wants to experiment with voice as an interface. How many players would have voice as a product available? If it is there, I mean, some players have worked on maybe outbound automation or whatever. So what I'm trying to say is it is not going to be always a straight jacketed answer. There is a technology, you have a use case, whosoever is going to give you the best outcome for your use cases, that makes it unique. And again, yeah, so
Thanks.
those are the nuances which need to be taken into consideration.
Okay, so before we conclude, I'll start from that side. From Yashish, 1 minute to each panelist. Again, looking ahead for the next couple of years, maybe one focus which you feel the insurance industry is bound to have in automation, one priority focus in the next couple of years. Briefly, 1 minute.
The main focus, according to me, for insurance industry would be to cover two main aspects. One is on the distribution of the insurance products, how more effectively it can reach to the lower end of the pyramid, that is below poverty lines or poverty lines, and get that basic necessity data from them to give them that insurance benefit. Although we have mass national insurance schemes in India ongoing, but execution of that is still a very big challenge in India to give the benefit in absence of relevant data for an insurer to underwrite. And second would be in terms of the claims management, including fraud controls, how insurance industries uses technologies so that the fraud aspects which are still prevalent in many of the industries or product areas in life or non-life get minimized or eliminated, and the experience of the claim and the tag for settlement, which generally is always a consumer who looks to, after I submit my document, I'll get my claim in X number of days or Y number of days, how it is brought down to a single digit or a few hours in India.
Okay, Ajesh.
So if I have to mention that in one line, the theme this year which we are driving is, digital at the fore and human at the core. So digital for sure, we want to take it forward. So when all of them mentioned about self-service and, doing it by yourself. So that is something which we are driving this year, but at the same time, not, deviating from the human angle. So it will be an hybrid model. But yeah, we are also looking at, do we really want to eliminate all our touch points? Where I empower my customer to an extent that right from buying, servicing, and claims, they can do it by themselves.
Okay, great. Sundar.
I think industry would have to get together on the database side. So
Okay.
we need to have more data on the repositories in terms of, again, somebody said death certificate. So death certificate automation, legal automation again. We still have some automation in the legal side. We get to see the cases when the cases come up. So the digital connectivity that you need across the infrastructure, right from customer side till the death certificate, till after service and the legal cases, everything is connected digitally. It's happening already. It's just that in the database side, we don't have a big insurance company contributing. On the certificate side, we have pockets of automation, but we have also lots of manual registers we maintain. Same the court cases side, we have digitally automated it, but still we have manual aspects happening. I think once the digital connectivity across the network is done, then I think there will be better coverage for poor people. I know you get standard products for the poor and you cover them. So that's what would happen.
Digital just make.
I think I'll, maybe break it into, say, a short-term strategy and probably a long-term, which probably we get to see. Now, I'm sure everybody would have heard about the new regulations of use and file. So you are going to really see the transformation in the product lines really in the general insurance domain. And more so with the insurtechs coming in, I think, the choices for the customer are really going to change. And I'm sure each organization has to introspect and really bring in
innovation and liberalization, as most of us mentioned from a regulatory standpoint, using that and really creating, products for every segment, and very, very easy, simplified, very, non-jargon based products being created. That's the focus. Aligned to that, a ecosystem digitally, kind of from a digital fulfillment standpoint, and ease of use. That's going to be critical for us. Second, how do you really help the consumer self-service and make it absolutely seamless? But while you automate all the touch points, humanizing the areas which really need, care and attention. So health insurance is all about, critical events. At that point, a machine talking to the consumer is not going to help. So those touch points continue to be humanized, continue to be really dealt with a lot of empathy, love, compassion, and at the same time trying and innovating and trying and engaging from a churn management and what do you say, basically persistency and continuity standpoint, and how do you really give that value to the consumer. That these are the areas that we're focusing upon. And of course, automation on claim and fraud management remains a focus area, because that hinges on how do you really deliver on the trust deficit that the Indian
True.
consumer has in insurance, I would say. Thank you.
Thanks, Abhishek.
I think the peril of being the last to speak, कि सब कुछ तो सबने बोल दिया. But in addition to all of these, 2-3 areas that I would mention is, number one is, while yes, business is important as life insurers, it is also our moral duty to ensure that consumers get adequate protection. So the adequacy of protection is what, as a mission to the life insurance company, I think that is critical. To add to that, how do we do that? So number one is, when we call it the focus area, is doing a complete need analysis, but the need analysis needs to be done completely digitally. And when I'm saying need analysis, it is not just superficial, it is down to the last detail of the consumer, so that you actually are covering the absolute needs of the customer, not just protection, but also savings and wealth build-up, and last is retirement. So that is what I call as adequacy of insurance.
The detailed need analysis.
Yes. So second part is, which is very critical again for life insurance companies, what we call as instant issuance. There's a lot of underwriting involved. So how do we can enable the front mile to be the first level underwriters, and then the second level underwriters at our organization level, so that we can issue a seamless issuance experience to customer. That is the second part. And third part, I think it was briefly touched upon, is the dataverse. Currently, unfortunately, because of legacy systems, because of changes in the system, and that is across the organizations, everybody has this problem, the data seem to be resides at various pockets. How do we get all the data in one place so that there is one source of truth? It is very sounding that it should be done. Unfortunately, it is not. So I think that is the focus.
Okay, thanks. So, in fact, there's paucity of time. Otherwise, the discussion, there were, I think, a couple of other points which we would like to deliberate. Great. Anyway, I would thank all the panelists. And before we disperse, we would like to hand over a financial leadership award to each of you. And may I request Sanghamitra Mohanty to come on stage to hand over the leadership award to our esteemed panelists today. So, first, Sundar, SB Sundar. Jasmeet Singh. So I would request all the panelists, we have the expo outside the hall. If you can just join us in the expo, and I would request all of you to stay back till lunch, if possible. I know. So now I would request Amol Maheshwari to come, and we have a special award for Amol. May I request Sanghamitra to hand over the award?
May I request everybody to be here for 5 minutes for a special award?
This is a special award for Mr. Amol Maheshwari of early salary. For the next session, I would now request Mr. Shashank Sharma, Director ScoreMe Solutions, to come on stage for the industry presentation. Mr. Shashank.
Hi, good morning, everyone. Can I start? So I think we've had a good panel on the insurance segment. We had all the stalwarts from the sector there. From that note, just taking your attention more towards the lending side is the next theme of the presentation which I've kept. And how have we reached towards the stage of digital lending and placing basically India in the right context there. So from that part onwards, so how have we basically evolved in an industry? So where exactly are we standing at today? So if I go back maybe 10 years down the line, we were at a stage where we were doing in-person meetings for a loan application. Now, as simple as that, I can place it up. If I talk about the current stage, we are at a contactless loan application. Maybe 5 years back, we were at this step. Where are we standing today is a complete paperless credit delivery when it comes to the current stage, and the decision is basically happening in I would say seconds or a minute's time. So from that part onward, how we have evolved this journey as a whole, and how have we basically been able to reach out to this place is something which we are now trying to evaluate. So over here, I'm just trying to deliberate more on the subject that how have different stages been digitized. So if you talk about the first stage, basically, which is a approach stage of the customer today. Now, how are customers approaching different lenders is basically it's a digital onboarding journey now which has been created. with the advent of instant KYC validations, and with the advent of liveliness check, which can happen on the go. So we are able to do a digital customer onboarding there. And once we are at a stage of a digital customer onboarding, what we have eliminated from the system is basically that the elimination of an in-person meeting which has been done. So nowadays there is no in-person elimination, basically in-person meeting which is happening. Majorly, I would say all institutions have moved towards a journey of through an online application journey. Next, if I talk about is basically on the automated data fetch or the document parsing algorithms. So the second crucial element which comes to lending is basically on the document parsing and the data fetch which happens. Now on the data fetch part, I would say that the role of account aggregators, the role of different journeys which we are creating for existing and new customers, and a consent layer of data fetch which has been powered in the system has really helped. So from that consent layer to going towards a stage of parsing, critical financial documents. So how are these critical financial documents getting passed today is basically that the customers are either, moving towards a digital journey where we are uploading these documents, or we are moving towards a journey where these documents are getting analyzed through basically an AI-driven pattern of rules, which helps these companies to, fetch any kind of a data there. So in short, your documentation gathering, your documentation capturing and analysis has all been automated here. And this was a very, very crucial element of the entire loan life cycle. If I move next into the slides, basically it is more to do with the middleware approach, which is being hosted. So nowadays what is happening is that if you go to a bank, on that particular instant itself, there is a application which is installed at the bank level, which hosts the entire information of the user, and basis which we are able to do a I would say automation on the credit policy of the bank, and we are also able to do I would say a complete end-to-end delivery of the entire solution from there. So what this has helped is that this has helped in the elimination of subjective analysis with a better turnaround time. If I move forward, next into this is the business rule engine and the in-principle approval, which is now been done. So this has also been digitized to a great extent. Different institutions have different credit policies, and nowadays we make it a habit that we are basically at a stage where the solution can be configured in a single application. And from that solution onwards, we are basically looking at a stage where different parameters and different analysis points which can be captured from different documents are getting factored in. From all these documents which are getting factored into a stage of mapping these important parameters to the critical elements in the rule engine has now been happening. The next is basically an online acceptance of the sanctions which is there. And then we basically talk about the integrations with the LMS and the core backend systems in the bank. Now, on these LMS systems and the core backend systems in the bank, what we have basically done is that we have done an induction of an STP journey of the processing which is happening there. Now, I'll just very quickly like to place India in the way forward. So, what are the growth drivers today which we have with us? Now, in the growth drivers, basically what we are saying is that, we have done a regulatory push towards digital lending, where launch of account aggregation, launch of digital payments, India Stack as a system, dedicated fintech committees which have been created by the, regulators. And a lot of technological innovation has also happened. Now, from all these points, the use of new age technology algorithms to mitigate risk and increase efficiency in lending is what has been empowered on. We next move into a stage of basically increasing the internet and the penetration of the smartphones. So as a country, we are, basically ranking second in terms of globally. So India ranks second in terms of internet penetration and the smartphone adoption. So which is again a huge opportunity for any fintech or any lender who wants to go completely digital on the lending side. At a demographic advantage also, we are sitting at a place where, we are creating 65% of our population is below 35 years. Now that basically helps us to identify different use cases for the new age entrants into the corporate sector. We are adding more and more middle house incomes and high income households by 2030 is what the prediction is. And in terms of the fintech adoption, also we are sitting at 87% adoption towards fintech versus a global average of 64%. So as a country, we have really done well in this space. And then next is on more to do on the product innovation side. Now, on the product innovation side, what we have been able to do is that there are new types of products like buy now, pay later. You had early salary guys here before this. We are having P2P firms. We are having POS-based lending. We have salary advance lending mechanisms. We have co-lending, which has really helped the industry to reach out to the last mile connectivity there. We have co-origination platforms, etc. So as an entity, what ScoreMe we have done is that for the new to bank customers, by default, we are having digital lending journeys. But for the existing customers of any institution, now this category was completely unexplored till now. So what we have done is we have also added a solution for the existing customers of different institutions here. Now, what basically it offers is that, when we are looking at a retail-based consumer base, analyzing the critical data points which are stored in the backend at any institution, all these basically data points help us to cull out different offers, to profile the customers into different heads, to undermine that whether my customer can be extended another line of offer or not. So this has helped in doing a POS-based lending. This has helped in doing salary advance loans, which already many players are doing. This has helped basically with better offers to customers who are having a better worthiness in any institution. So all that is moving towards a next layer of journey. Next, if I talk about the major backbone of the country, which are basically the MSMEs. Now, on the MSME side, what we have been able to simplify is that we have been able to do a lot of auto renewal journeys, which is the existing MSME base of any institution. We have also been able to do a lot of digital lending journeys for MSMEs. And EWS is also one of the parameters for MSMEs which is there. So in a simple use case, if I'm talking about an auto renewal for a CC account, earlier what it used to happen is that if a bank has to, or if any lender has to give a renewal on the working capital side, they were basically doing the same amount of exercise on the paperwork on the analysis side. And now what we have done is we have basically changed the entire course of this entire journey, and it has now been automated to a level of STP where there is no manual intervention. So the backend system is integrated with the bank system, and the banks or any of the lenders, they are basically directly sending the data to our application, from where it is getting analyzed, and end-to-end decision is being taken up for the customer for that. So earlier, if I talk about a 7-10 days process of renewing a customer, now it has come down to maybe just a few minutes of analysis which is there. Rest is basically more to do with the top up on existing loans. So what the top up has done is basically that our data is continuously getting analyzed at the back end. Now, once this data is getting analyzed, we are sitting at a stage where we can bring out new and new offers for the customers, where we can bring out new and new profiling for different customers. Every day my profile can change internally in a bank. So this is happening with the real-time information in the backend. This is happening with a lot of public domain information being digitized, and all that is basically what is helping all these institutions to create this new and new offers. Now, in the end, I'll just like to focus more on the digital lending platform, that how does a stage-wise lending platform helps. Because in day-to-day as layman's, we don't get to know that how my journey is getting digitized. But how the journeys are getting digitized is basically that we look at a public domain on a web application. From the web application, we basically then move towards a data analysis layer, where my income documents, my KYC documents, my company documents are analyzed. And then we basically move into a data analysis to an integrated report analysis, which is done on a product-based journey. From that, we move on to the next layer, where we map this entire aggregation of the data points to the core in the backend. So if you have to take a personal loan from any institution, what they have is they take your income, they take your date of birth, they match it to an internal credit policy. So all these parameters can be digitized there, and all of this can really help any lender to completely digitize the customer onboarding as well as the analysis part of the entire engine. So in a nutshell, what we are sitting at a country level is that from a stage where I started my presentation that we were reaching out to a lender for any kind of a loan, we are sitting at a stage where even sitting in this conference also you can apply for a loan, and by the time my presentation ends you should have funds in your account. So this is the kind of stage where we are sitting at from a retail perspective. Maybe once you finish up your lunch and you reach out back to your office, you can have a business loan dispersed in your account. That is a stage where we are sitting at when it comes to the business loan side. So as an entity, we are already supporting 200 institutions from an end-to-end perspective of digitization, which basically includes a lot of fintechs, a lot of NBFCs, a lot of credit rating agencies, and multiple banks in the countries whom we are servicing. So with any of these banks, we stay in the back-end layer. You as customers stay in the front-end layer, and in between is the bank. So that is how we have been able to digitize this, and I'm pretty sure that in the times to come, we should be able to reach towards a more enhanced way of digital lending. And as a country, since we have taken a target of growing towards a big economy by 2025, so all that cannot happen till the time we move into a stage of more partnerships on the fintech side and more adoption of technology in the lending side. Thank you.
If you can come and hand over the leadership award to.
That's a small token of appreciation.
So for the next session, we would like to call on stage Mr. Rahul Nischal, Vice President Technology at Innovative Payment Solutions. Welcome, Rahul.
Good afternoon. So at Innovative, we are trying to do something which probably is changing the way things work in the offline world also. Okay, we have done this already in the past year and impacted millions of lives. Sorry, just yeah, okay. Right. Oh, this one. Center. Okay. Thank you. We call it as a collaborative commerce platform. What does the collaborative platform commerce does is basically it brings up the most, whatever so far we have spoke, right? The most part, everyone was talking about two things. One is the experience. The other one is they were talking about is basically the embedded. That's what the collaborative commerce does for the retailers, okay? So it brings in the brands, it brings in the bank, and it connects the merchants, and then we have the happy customer there. So basically you can buy any product, okay? The payment is, as earlier said, people doesn't want to wait, right? You want to buy a phone, you want to go and you want to buy. It's not about your bank balance, it's your ability to pay it back. So basically without waiting, just on a tap, can you take up your product on the loan? Basically that's what is the collaborative commerce. If you get into this GT traders and all, they can't reach these big banks, nor they can reach the brands, but they don't have to do that. We have done for them. This is what we are taking it forward actually. How do we do this is everybody spoke about experience. We have done this. In the payment, what do you see? You see in the small terminal, basically the columns, tabs or squares. No, we don't have that. We have a cube. Yes, it's a 3D cube. It's a sensorial design. It really rotates in the real world. It's working with a lots of merchants and already touched millions of lives of the consumer. Okay. What does this brings into the cashier? What does this bring to merchant? And what does this bring to the consumer? So it's no more the search, tap, and do. Whatever you want, it's already ready and available at fingertip. All the three entity, the bank, the brand, and the merchant is already integrated. The salesman has to just sell the product. The consumer doesn't have to wait for signing documents or doing anything. You tap your card, enter your PIN, you have your product as a cash, as a loan. So it doesn't matter for him. So basically he gets the product then and there. Okay, so sales is more fun. It's no more go search, do this detailing. The same way, the experience for the merchants is simpler. So they doesn't have to get into training and doing it. We have the experience everywhere, right? They are bringing experience. We are bringing it to the most dumb terminal, which is untouched. And this is in production running now. The other part we bring in is most important is basically, I spoke about the bank, I spoke about the brand, but all of us know when you say the loan, when you say the brand, when you say the band discount, there are a lot of configuration, lot of things get in the back end, right? How much money the cashback it gets, what is the discount amount in that by the brand, by the bank. Same way the EMIs. Who pays the interest rate? Is it a bank, is it a brand, or is it a consumer? Okay, all those things we fix it up. That's what we call it our overnight tech. So basically, the sales decide today, tomorrow is this is what happening in our sales. I want to bring up this model, this particular SKU, sales up. So this is the offer I'm giving it. You give it as the evening, morning, it's live in all of the retailer merchants, basically. So you don't have to keep waiting for this. All the configuration combinations you want with the bank, with the brand will be live by the morning, and your product is there to roll out actually. That's what we call it as the overnight tech actually. This basically our tech platform. I'm not going to go much in depth, but this is where all of the things become simpler to the merchant whose job is to sell the product. Same way for brand, it's all about how much sale is done. It's never about what is the tech behind this, how do you configure, do I need to wait for 3 days to reflect the offers? This is all about happening on the click, on the fly. So this is the tech we use. We use a lot of data. We use a lot of intelligence in that to configure, to bring up the products, to show it on the front end in a simple click. So basically, the whoever is buying it has to do just 3 clicks to buy it. The 4th click is basically the PIN number of the cards, which basically people enter. Okay, this works with different kinds of the EMIs or the loans, which is basically FlexiPay or cardless or even the card EMIs, both debit card. This is what is the collaborative. I'm just going to take you through an experience actually, which is a video shoot of the merchant. What does it talks about it? Okay, I have one part left. I'll say that at the end after this. Okay, the music is, Rajnish, music is music.
कोहली है। आई एम द ओनर ऑफ सुंदर मार्केटिंग आकुड़ी में। हमारा मोबाइल शॉप है पिछले 12 साल से। हमारे शॉप में सबके ब्रांड ईएमआईज भी होते हैं और काफ़ी कस्टमर्स के जिनके कार्ड नहीं होते, जैसे जिनका एसबीआई का कार्ड है, आरबीएल का कार्ड है, उन पर नो कॉस्ट ईएमआई नहीं होता है। तो इनोवेटिव मशीन के थ्रू हम वो कस्टमर्स को एक्सेसरीज हो गए, वॉचेस हो गए, कोई भी सेकेंड हैंड हैंडसेट्स होंगे, नॉन ब्रांडेड हैंडसेट्स हो गए, उनको नो कॉस्ट ईएमआई करके दे सकते हैं। जिनी वॉलेट में हम हमारे सारे कस्टमर्स को अप टू 999 तक का कैशबैक देते हैं और ये जिनी वॉलेट के थ्रू हमको 2 लाख का वॉलेट जो बैलेंस मिलता है, जिससे हम कस्टमर्स उनको हम नो कॉस्ट ईएमआई करके दे सकते हैं। जिनी वॉलेट में हमको बहुत सारे बेनिफिट्स है और कस्टमर्स को भी बेनिफिट्स है, जिसके थ्रू हम अपने ऑनलाइन कस्टमर्स को डाइवर्ट कर सकते हैं। तो मैं रिक्वेस्ट करता हूँ मेरे सारे रिटेलर भाइयों को कि इसके थ्रू मैक्सिंग करके लीजिए और अपना कस्टमर्स के साथ में रिलेशन अच्छा बना के लीजिए।
So that's what it is. End of the day, it's an happy customer. How do we do this? Those are 2 things which people speak, but we are implemented and taken it live to the mass market with thousands of merchants, which is happening. The first part is, of course, as you all know, it's all data. Okay, how do we collect the data, put it in a form that is consumed by the merchant and finally delivered to the end consumer? Okay, the other part is basically people speak about experience, right? We have done it. What we have taken a step ahead is sensorial, basically experience. So we have taken 3 parts of sensorial. One is tactile, basically the touch. The other one is the appearance, right? The look and feel. And the third one is basically, of course, the sound. Of course, that was started probably by Paytm, like you received the payment, but yeah, we have all those three ingredients, which makes it much more fun to sell for the salesman and the consumer to buy what he wants rather than getting into detail in a fraction of seconds without waiting. Thank you.
May I request Gopi Krishna Arora, co-founder of APAC News Network, to hand over a token of appreciation to. Thanks, Rahul. And before we go to the next session, perhaps it would be the best to also mention all our partners without whose support organizing an event of this magnitude would not have been possible. So we would like to thank our gold partner Citrix, our knowledge partner Resurgent India ScoreMe, payments partner Innovity, associate partners Early Salary, Mobicule, Pinnacle, our exhibitors Bottom and Trejara. Thanks to all the industry partners. For our next session, I would like to call on stage Mr. Shobhi Goswami, the co-founder and chief group editor of APAC News Network. He would introduce the next panel and we would proceed with the program.
Thank you, Rajneesh. So since morning, we had three insightful sessions. One session was on banking. The second session was on insurance, and there were also some industry presentation. And now we have come to a very important aspect of the financial sector, and a lot of innovation is being happening in that space. So this session is all about NBFCs, and for that we have digital transformation leaders from the NBFC ecosystem here with us. Name of the session is Analyzing Technology Role in Customer-Centric Approach of NBFCs. So may I invite Mr. Shashank Bajpayee, CISO of ECGC, on stage, please. A huge round of applause for him. Mr. Lalit Trivedi, Head IT and Chief Information Security Officer, ITI Mutual Fund. A big round of applause for him. Mr. Amit Kothari, Chief Technology Officer of Indostar Capital Finance Limited. Mr. Shiva Kumar Nandipati, CDO, Fed Bank Financial Services, known as FedFina. We have with us Tulika Sonthalia, Head Digital and Strategic Alliances, Hero Housing Finance. Huge round of applause for her as well. We have with us Jaya Janardhan, Director and Co-founder, Creontech Consulting. And we have with us Mr. Ashish Agarwal, Director, Resurgent India Limited. And I'll be playing the role of moderator, so I sit in that side. Hi, welcome all of you, and I'm sure for next 45 minutes, an hour or so, we'll be having some insights and deliberations on the opportunities and challenges before NBFCs. I'll say that we'll focus more on opportunities and let's treat challenges as opportunities. And I think digital innovation and technology is going to be the game changer for NBFC sector as a whole. So let me put the first question to Mr. Shashank Bajpayee. Mr. Shashank, how are the NBFCs being classified into a 4-tier pyramid? Your thoughts on that, because there's a second question added to that. I'll ask that question to others. So let's have a perspective from you on that.
As we go on a digital innovation side for the NBFCs in general, and me being credit guarantor, and I've seen the revolution around the data which flows through the networks, and a lot of analytics which really helps all the NBFCs, all the BFSI across all verticals. So it's all about data intelligence, and I guess it's about the integrity, how we are kind of maintaining the sanity of the data which is getting shared across our networks, be it our intermediaries or be it our partner networks or our dealers. And at the same time, I guess the business is driving, from tech nowadays. That is where we are just no more a support function. We are actually driving a lot of business decisions with regards to the data intelligence which we give back to the business folks. So yeah, that will be my opening remarks on the part. Yeah.
So I'll take the second question of that same part. Let me ask this question, Mr. Ashish Agarwal, Director, Research at India Limited. The added question with this question is that how are these tires using emerging technologies like AI and robotic process automation? And again, the compliance is a very important part of that. Your thoughts on that?
Great. So good morning to everybody. So I'm from Resurgent India. We are basically merchant banker, and we are deeply involved with NBFC sector, where we are helping them in many ways by way of compliance, regulation, policy, funding, and all. So first of all, I think your first question, the layer-based approach actually. So the idea of I think government is to bring the level playing field with the banks and NBFCs, so that whenever you see that in the past, in the last 3-4 years, there are 3-4 episodes where I think public has lost money also. Even bankers have taken the haircut also. So like ILFS, DHFL, and some are in the pipeline. So I think these things should not happen again. The government has come out with a regulation where they are categorized these NBFCs into 4 areas. I think 4 layers basically. So where the objective is this small NBFC which are not public deposit taking NBFCs should be in the base layer, so that they will face the lesser regulation, where they are not taking public money, they are not lending to the sensitive sectors and all. So the base layer is I think will not require much of the technology from the regulation point of view. But in case of middle layer and upper layer, I think this is very important. So these are 4 layers: base, middle, upper, and the top layer actually. So in the middle layer, the companies which are having more than 1,000 crore of AUM, they will part of that the middle layer. For them, there are many changes which have been done from the regulatory point of view, and the objective is of the government that these NBFC should not have any risk in the future from the any kind of regulation. So and the upper layer, the top 10 companies of the NBFCs of the country will be part of the upper layer actually. So where the regulation will be more tight for them, and the top layer, which is I think will be kept empty, but the objective is that whenever there will be any systematic risk on any large NBFC and all, that this will fall in the top layer, which will be under the close watch of RBI. So you see that in this regulation, what they have done actually, they have tried to make the parity between banks and NBFC from the NPA point of view, from the experience of the people who are the part of the NBFC, top management or the senior management, from the risk from management point of view. So there are many things which are there. So in case of the NBFC, the AI and the robotic and all, practically you see NBFCs are ahead of banks in terms of using AI and RPA, robotic and all these processes, because they have spent a lot of money. So you see that NBFC are not NBFC, they are fintech also. Many NBFCs are fintech actually. They were fintech and then they have become NBFC. So they are using these tools regularly in their process, and I think it is helping the customer to get the money at very fast. I think some NBFC are even lending it within 3 minutes only basically. So I think this is the journey which is helping the entire sector, and this regulation I think will help the NBFCs and ultimately the consumer. And somebody can work out the solution where the regulation point of view, because this is a transition phase. So in this transition phase, if the NBFCs, some technology company can help the NBFCs to transform from the traditional approach to the technology-based approach, actually. Still, there are many NBFCs are there which are having on the traditional approach. So I think this AI is a game changer, and this will help in the knowing the consumer behavior, the collections, the payment, and can be better than whatever we have today.
Right. So according to Ashish, AI is the game changer when we talk about the classification of this four-tier pyramid for the NBFCs. I'll take a perspective from Jaya, Jaya Janathan. Jaya, your take on that. It's on, I guess.
Yeah, thank you. As rightly said, see what happens is in the space of whenever we are in the consumer world, right, whether it's banking services, anything, the need for us to move fast is very critical. And things are moving very fast. Okay, so in the NBFC world, it's a space of the organization that actually services will actually get the customer. And today it's not a seller's market, it's a buyer's market. So the buyer has the right to go and make sure that they take the service from the organization that delivers the best. How does AI and RPA work on this is, see what happens is the customer behavior is now well known. Okay, he borrows, he repays, there are multiple processes which tracks him. So what happens in the entire process is AI is that's the intelligence that's applied in terms of behavior. It gives enough data to scram through the entire process of a customer behavior and arrive at how this guy will behave in future. Is he eligible for more data? So all this put together, what happens is the ability of an organization, if they start working on AI, the ability to track a customer, service him faster, and make sure that he gets what he wants, track him for his collections, ensure that you give him additional load, all that comes in the process. So the need for every organizations to actually gear up and make sure that the AI is well developed, and in terms of not only sales but also after sales, and that's where most of us really fail. After sales service becomes a big challenge, and therefore it's very critical for us to make sure that the way the service is built in the way of behavior which AI does has to be developed. The other piece is that when we talk about efficiency, we talk about cost, RPA comes in a big way. Okay, how do you define RPA? Okay, the way we define RPA is voluminous, manual, and continuous processes has to move into RPA, brings down the cost, brings in efficiency, reduces the transaction cost of a processing of a transaction and servicing a client. So both are intertwined, and at the same time, both can work independently. And I just wanted to kind of share, this is not just an NBFC, even in the financial services, since we're speaking in the financial services space, it's very critical for all of us to look at every single area in the space in which we are in, to work on which processes will need to kind of move into an AI, which processes will need to move into an RPA, and keep working on that so that we get the benefit out of it. So today today nobody talks, like, of course, profit, everything is spoken about, but also one of the critical KRIs of every organization is, where are you in technology? Do you have AI that is there? Do you use RPA? Do you use intelligent automation? Everything is asked as one of the KRI for you. So I think, the less, I mean, you can keep talking about it, how much it benefits it, but I think it's here to stay. We have to adopt it and we have to use it. So,
But taking cue from what you have said, I think a very important part you have said is not only about using AI, but you also have to look into that, how much developed that AI solution is, that so that we can have the optimal use of the AI and a better result outcome in that sense. I'll take a perspective from Mr. Lalit Trivedi, Head IT and Chief Information Security Officer of ITI Mutual Fund. Lalit, with bad loans being a particular challenge for NBFCs, how is, again, AI or financial analysis coupled with technology is helping them to look at more prudent risk assessment? Your thoughts on that?
Yeah, good afternoon. See, risk assessment is one of the key area for any BFSI, NBFC, or any other financial services nowadays. So even if you are onboarding any customer and before giving service to him, you organization want to understand whether giving him some credit or organization side, any loan or anything, whether is there any risk involved or not. So these are all the things. So there are two things. One is monitoring and unmonitoring. Monitoring, you have all data of the client from industries where you can analyze each and every customer before making any commitment to him or doing any financial transaction with him. Unmonitoring, you have things, but you don't know the insight. So where you have to implement proper AI in place. Now, still I can say AI ML is not at matured level. This is a growing stage now. It has long way to go, and especially on BFSI or NBFC segment.
So you think it's still long way to go?
Yeah, there are so many things they can implement. They can analyze, or there are technology companies can come out with the new ideas which can help to any NBFC and any financial service organization. Now I can share one example of mine, a chatbot example, which I was associated with one of the NBFC. So just I went to their site and just put something to get the detail what chatbot is doing. So after 4 and 5 things, there was nothing. It has again come back to first, just what you want, what you want. So I think technology had also play a major role before evaluating this any technology for the business, because after 4 and 5 thing, it is coming out of the customer requirement. I don't know whether they have done any evaluation or customer centric approach before implementing the technology. So my suggestion is for any technology head in the BFSI, before you implement, first to evaluate, put yourself on customer side. What in case you are customer, what you want to know from the organization. I think that are the major thing. Once you know and this process in place, I think AI ML will help you to grow.
So I think put your feet in customer shoes first to understand, evaluate the technology. I see Tulika
Yeah,
Sunthalia is quite eager to answer this. So let's have a perspective from you as well on
Yeah.
this question.
So, from an NBFC perspective, I think risk assessment through AI ML is actually obviously now become the core of the business. And to that extent, for us, we are primarily, when we're looking at assessing a customer, we're looking at his ability to pay, his intent to pay, and our ability to recover, right? So I think from that perspective, there's a lot of today, I think the problem is more that there's so much data and there's so much information available. It's more about how you can use it and harness it for your benefit, right? So from that perspective, I mean, you have account aggregators, you have like thousands of variables that get captured in your bureau reports. You have geotagging. You can use KYC tools to mitigate fraud risk. In the housing space, there are digital valuation tools, etc. So the thing is actually to build an intelligent model and then to have enough data and to keep testing it, keep reevaluating it, keep updating it with more and more data. Couple of things that we should be mindful of actually when we're, because there's also a lot of social media data available and things like that. I think as NBFCs, couple of things we really need to be mindful of is, to respect customer privacy and to not misuse it. So to stay within the realms of what's allowed and allowable rather than taking advantage of a customer who needs a loan. I think the power in AI, ML, etc., is the fact that it's opening up more and more segments, to lend to, because it's reducing the cost of risk assessment, it's reducing the cost of collections. You can use AI, ML to nudge customers non-intrusively to repay you. You can see their patterns, their spending patterns, their earning patterns, and timely, at that time, get the EMI, etc. So I think it's really it'll open up lots of segments, and it's very powerful. I mean, it'll help us kind of help Bharat's middle class reach its aspirations. So if used prudently and updated regularly, I think it has great power, and we should all be using it as much as we can. To your point as well.
So according to Tulika, with great responsibilities great power comes great responsibilities. So we have to be aware of that fact and have to use that kind of game-changing technology judiciously. We also have to think about the privacy matters as well. End of the day, we were talking about citizens' data, and there's a very thin line when not to cross over that line. So I think we all have to keep in mind that. Let's have a perspective from Amit Kothari, CTO of Indostar Capital Finance Limited. Amit, when we talk about client onboarding operation and the KYC and all those factors, do you think that the digital innovation which has taken place in last 2-3 years, especially in last 2 years, has been the game changer, or do you think that we still have to go a long way to achieve the ultimate goal of smooth onboarding of customers?
So I think the last 2-3 years have expedited the transformation journeys for most companies, not just BFSI, all segments. But the primary objective of business is business, and for banks or NBFCs, it's the customer. And onboarding is where the whole thing starts. Sourcing is where it starts. So when you are not able to go and meet your customers, where the entire process was physical, where you have to meet the customers, take paper, and then you just cannot do that, but you still have to service and grow, digital becomes imperative. It's not an option. That's the only way to do it. Now, going back to the same way how we used to do it, let's say 2 years back or prior to that, and now when you look at how prudent it is for us to have some of parallel strategies, I think phygital is probably the most appropriate today. But is that the end of the road? Definitely not. One thing that I have learned personally over the last decades working in this industry is never say technology is enough, because there's always something more that can be done. There's always a better way to do it. There's always a faster way to do it. There's a smarter way to do it. And specifically when you talk about BFS, when you talk about customers, when you talk about data security, when you talk about KYCs, so take KYC for example, it doesn't just end at knowing your customer. There are several pillars to that. One is the compliance aspect. One is actually gathering data about the customers that you need to be sharing with your regulatory bodies on a regular basis. One is to do your own due diligence to see where your customer fits, which is the right segment you want to place him. How do you define your the customer lifetime value of whatever you know about the customer? It could be through primary sources. It could be through secondary sources of data. It could be alternate data. AI will play a role because it will now start telling you a little more about the customer than what is known outside. You don't have to just go and look at a Facebook to find out what is the customer up to. You can now start building your own models to enrich data on top of that. So you can use commoditized data and then further use it in your own ecosystem to decide what I think this customer could be doing, could be needing, where he or she is in their own lifestyle, and start coming up with your upselling, cross-selling initiatives to further increase the pocket size from the customer. The other aspect of this whole thing is not just ending a due diligence in the regulatory bit, but how would you continue to monitor the customer movement? How you would be required to do regular reporting. If you have taken a housing loan, you are a customer for good 10, 15 years, you have to continue to report information to regulatory bodies, which is pretty static. I think everybody's figured a way to automate it. It's happening. Machines do the job. You don't lose your sleep over it. But would you know if it would be smarter for us to know if there's a customer who's defaulted once, what's the likelihood of him or her defaulting in the next one? How is the DPD movement happening? Which bucket are you going to be? Is this a potential NPA customer? Thankfully, with technologies that we have, it's possible. Do we have the right models? If you have the base of data, if you have past track records, you can. But think of a case where an NBFC or a bank or a company has started operations and you are evaluating the scenarios in less than 3 months. Will AI and ML help you? They will give you an indication. There is no foolproof way to doing it because you do not have the wealth of data for you to make an informed decision. So it's very, very imperative to have a multi-pronged strategy there. If I were an NBFC, so if I talk about the scale-based framework, right? Every company is into a transformation roadmap. Just because my classification changes, will my transformation roadmap change? Actually not. I may have to do a little bit more reporting. I may have to do a slightly different kind of reporting. But does that mean I'm going to change how I source my customers? No. In fact, I will start looking at smarter ways to do it. If I know three of my competitors doing it in one way, I'll try and I don't have to reinvent the wheel. I'll start mimicking that to begin with, and then start figuring how can I do it better. Can I try the same thing in a different market? Can I try something different? What does my data tell me about how that market is going to behave differently? That's where the power of machine learning algorithms come into play. That's where the power of AI comes into play. And to the point that Lalit made, there's a lot more things to be done. There's been a constant debate in a lot of channels. Has AI reached a point of singularity? I think it cannot be a generic statement. There are plethora of use cases and something that we cannot even possibly comprehend where AI can be applicable. What is the degree of maturity a particular model, a particular data set, a particular technology can achieve as an end objective? There are technologies which can take you far down the road and this adequately matured, but there are also categories where it is in such a preliminary stage, you probably would think twice before investing in the technology because you think it's too naive and it is not really the right time for you to invest, and rather wait for a much more mature framework and a mature approach for you to even go deeper in the market.
I think the opportunity is huge. And I really like that phrase when you said that never think that this technology is the end point. Rather, you never know what kind of new technology is coming, but every day something other is coming. And just like AI, there can be future generation technologies which can change the entire paradigm. True. I'll come back to Amita. Let's have a perspective from Sivakumar Nandipati. Mr. Sivakumar, if I may ask you that in terms of leveraging analytics, one is for customer satisfaction, and at the same time also customer KYC. Do you think that it has been a huge, it has got a huge impact in this, that leveraging analytics for that in a big way?
Absolutely. Let's start with customer KYC. If you have to break KYC into three pieces, it's predominantly you understanding and finding out the customer, doing the due diligence, basically identifying the customer, doing the due diligence, and ongoing monitoring. Now, for identifying the customer, if we have customers' data stored somewhere, we can make his life easy by showcasing the fields and taking just yes, no, or only required fields can be submitted digitally. And for that, the analytics plays a huge role. In case if you wanted to do it physically as well, for the scheduling perspective, or from the back office teams and sales guys, that there also it helps actually. Now, coming to the second section after identification, due diligence. There's lot of AI ML based technologies where the live photograph has been matched with the existing photo, and people who are tested live with showing the numbers and asking them to say or some titles. So the live video getting captured and recorded, which is foolproof for the audit purposes as well, and done most importantly, the tat is very fast actually. Customer is comfortable, he gets its requirement done there itself. On the other side, companies are also happy mode because that their the records and all everything, their transactions are getting closed very faster. The third one, which has become most important, is ongoing monitoring. Now, KYC, we all think it's just a process which we take up from the basic customer details and, for the regulation purpose, which we do. But ongoing monitoring is the key, actually. For that, the analytics plays
or email responses to the customers. The chatbot has actually replaced it cost-wise, efficiency-wise, turnaround time-wise. It has brought in a major shift in the way it interacts with it. Similarly, even when in the, while we're talking about chatbot, I'll also go to a little step further, largely in call centers today, okay? Call centers largely have started using not only chatbot, but also robocalling, which is also customized and specialized to the customer that we're talking to. Culling out data, talking to him, checking out with him, or if he calls up, the customer, the system understands who he is and makes sure that the responses are made accordingly. So, all these technologies are great. The technologies are huge game changers in our in the NBFC market, also in the financial services market. But I think what really is the need of the hour is the way we kind of get them into one umbrella, use one effectively with each other, complementing each other and getting the best out of it. Because each of them independently may work, but if they don't work together, then you will still not get what you want actually.
Right. Purika, your take on that?
Yeah, so I think RPA chatbots, they've essentially just changed the way we are able to serve customers. I think it's great. It's a very effective tool because you are able to personalize. You're able to serve the customer as per his preference at the time he or she wants, in the language that they prefer, and very quickly. So from that perspective, it's great. And it has its uses across, right? As a customer, if I want to evaluate lending products, I have some quick questions, I want to understand better, again, I can use this. If I want to pull out my statement of account, etc., then quickly and immediately it happens. If I want to as a lender, if I want to again collect from customers, because finally we're all in the business of collections more than anything else. So if I want to collect from the customer, I can use voice bots at the opportune time, or I can send out gentle nudging messages, etc. So from that perspective, I think it's really transformed the way we've served. The couple of things that we need to ensure to make it more effective is, of course, that it's omni-channel. So we are able to give the customer the same kind of experience, whether he comes to us on the web, whether through WhatsApp, through something else, or through the IVR call center. The other is, of course, again, like in anything else on technology right now, the learning ability, right? The ability to keep learning and reforming the way we are able to service the customer. I'd like to actually talk about this from the perspective, like, if James Bond were to come onto your site, or want to use your bot, we should be able to, give him his martini shaken and not stirred, right? He shouldn't have to ask for it. So from that perspective, I think the whole learning ability of your bot would be critical. And finally, the one thing that I find irritating when I kind of use bots is a lot of them, because of the kind of the kind of commercial transaction you have with the developer, where you only pay if it doesn't go to a personal agent, right? A lot of times the option, if the bot is not being able to solve your problem, the option to be able to ask for a person to service you comes right at the end and after a lot of back and forth. So I think that option should always be given to the customer, that please, you can always go and contact a live agent who you can speak on one-on-one. So I think, like someone else said before, the whole phygital, it has to be backed up with a good physical, personal customer interaction in case a customer is not comfortable with the bot.
So it will be an amalgamation of both digital and physical aspect. I think Lalit wants to add on something on that, please.
In my view, chatbot is not only a tool, it is a virtual employee who is working 24/7 for your organization, for your customer. So where you take care of employees, and before recruitment, you have so many process, background check, analysis, and I think before implementing the chatbot, I suggest all financial service organization technology have to do your analysis, make proper studies, make your questionnaire what I want to present to the customer in case of his coming or using the chatbot. I think these are the analysis we can do. Then we can use maximize of chatbot.
I'll add one question to you, and then I'll come to Shashank as well. A different perspective I want from you is that uh, when you're talking about handling data and that amount of data, and that's citizens' data, security aspect is very important. Do you think that, or what kind of collaboration you think you can look at with the technology service providers or the industry, which will take ensuring of data privacy, data safety into the next level? I know a lot of things are happening every day, but what is your take on that? I'll have the same question to Shashank as well, so Shashank can also put some light on that. Yeah, let's have
Okay.
your perspective first.
So you want to privacy side or analytics side?
Both the sides, if you can just.
Okay. See, analytics side, I can say with data, based on data volume, what any technology company coming to the business, I think they have to do. I think if I go with I have some counted business case or use cases. I think it will not work nowadays because everything moving from traditional to digital, and until and unless you don't have enough information for any business, if a technology person is going to business to explain or buy my product, I think this will not work nowadays. So they have to do proper their groundwork. They have to do analysis of any business where they want to sell the product. Industry, they need to research on industry. What in case of NBFC, what NBFC's requirement in case of data, in case of analytics, MIS, what kind of additional thing you can provide to the business. I think it will add value to a technology as well as side business, both the side. And data privacy side, I think then is a very big topic, but I think vendor side as well as organization side, we have need to define the proper checklist. If my data is inside the organization or is moving outside the organization, what are the things which I want to monitor or implement to secure the data? So there are various compliance and regulatory checklist based on business that we can need to check and implement.
Shashank, your take on that.
Yeah. So very rightly pointed by Lalit, that obviously we have to imbibe security and privacy right at the technology front. So I guess security cannot be done once the technology is procured, as I was telling. So I guess it has to start right at the business stage itself. Like I rightly said, data is huge. We are collecting a lot of data from the citizens' data and everything. I have to start analyzing what data pointers are we collecting right at the acquisition stage, right at the KYC stage, where it is going. So the data flow becomes equally critical, right at the envisaging or the architecturing side of the system itself. Many times what happens is that security is done once the system goes into production or is going to go into production. Then we look at the quality analysis on the security side. But then it is too late for us to analyze the data pointers and then enforce privacy norms. Because very soon we would have our own Indian version of GDPR, which would enforce a lot of privacy regulations. And then we will have to start back and forth analyzing what all systems are capturing which all data parameters. So I guess that is one side. And secondly, as I said, security also cannot sit outside the entire IT ecosystem. It has to go and gel in, as that's what we are seeing as SecOps is getting generated, or DevSecOps is going ahead on the IT ecosystem side. So security is sitting along with the developers, along with the operations, to analyze what all security gatekeepers or security controls need to be implemented, as well as operational side also. When our internal folks are trying to analyze business data, which all data parameters have to be masked, which all data pointers need to be can be shared with the call center supports, because ideally the data leakages and whatever we have seen are usually due to internal mistakes. Major reports have been filed, and they have been investigated, has been come to know that there are internal mishandling or internal misconfigurations which lead to major data breaches. So that is where we need to keep on analyzing that what all security parameters have to be kept in, and right at the design stage, not at the later stage. So that is where it is going as of now.
Right. Great insights by both Lalit and Shashank. let me ask a question to Mr. Amit. Amit, where do you see 2 years down the line or 3 years down the line, the digital transformation ecosystem or the paradigm heading towards for the NBFCs? Do you see that, as Tulika and others were saying, that it will be more of physical rather than only physical or digital? Or do you think that some game-changing innovation is on the anvil? Your thoughts on that?
I think that's a great question. It's lovely to answer that because that's where you get a free mind to speak whatever you think like. But on the serious note, I think perennially the next 2-3 years are always beautiful for a technology guy, for somebody who comes from technology background, because your business needs keep evolving, your business paradigm keeps changing. And if you are in a country like India where there's so much impetus on growth, the economy is going strong, there's impetus from the regulatory bodies on tighter governance, which means you have to have more technologies to strengthen the way how things are done. So I think a lot of focus is going to happen on how you tighten the way how you do your business, how you run your business. It's not just going to be about how you acquire or how fast you acquire a customer, but it's what is going to be important is how you ensure that your customers stay with you, how you service your customers, how you make sure that your customer attrition is minimalistic. Data, every company today has now realized the importance of data. Big data has just transformed the landscape. Every company is sitting on a wealth of data. So everybody's now started talking about how you want to have your data storage, your security, etc. But more often than not, what I think companies fail is to understand you need to have an extremely robust data architecture. You need to have your right set of security frameworks in place to ensure that your data stays secure, it stays with you. There's so many strategies that you need to apply. And that's where I think a lot of transformation and impetus should be happening. There's risk to your data in transit, there's risk to your data in storage, there's risk to your data over the wire, within your network, outside your network, with a third party. Bring in cases like where you have an account aggregator framework coming into play, where data which has been intrinsically yours as a company is now suddenly being shared with the competitor, though with a consent framework, though with a regulated framework, but it's still going out. So there's so much of information that's flowing across the ecosystem. I think I envision a lot of focus and impetus to happen on the security of data, the security of your processes, security of information that's going out. People will be wise enough to have their security beefed up to a great extent. Reduce your attack areas, surface areas should be dramatically reduced. Tighten your perimeters. You're more prone to a ransomware attack than you ever were. People are talking ransomwares like it's anybody's business. You and I would have been worried about just a basic virus infecting your computers. The same is happening with ransomware, and some of these are extremely detrimental to your business. So I think a lot of focus will have to be on that. Transformation on the business side will continue to happen. Newer business models will arrive. We have a unicorn every few days, which is a testimony to the fact that there are so many more people thinking about what is a new way to do business in the country, what's a new segment that you can target, what's a new product that you can bring to the customers. And one of the most important things where all this technology landscape will play a role is how you can make your organizations leaner and meaner by leveraging technology inwards. All the technology that you're talking about, servicing your end customers, eventually has to be played into the hands of your own employees, your own workforce. If I want to grow from a 10,000 customer base to a 25,000 customer base, does that mean that I'm also going to increase my workforce by 50, 60%? Actually not. I'm constantly thinking about how my workforce can be made smarter to handle increased load, increased growth, increased business. And with more and more regulations, I would probably look at how I can have more technology play a role in trying to cover all these bases. So be it a customer, be it my operational efficiencies, be it my cost efficiencies, be it my security. There's an entire paradigm of areas where we will have to start focusing on. And I think innovation to me will come from all the areas. It cannot be on a single track. It cannot be in one direction. it will have to be all encompassing. And only those companies who will be able to leverage all of them in their own unique ways to balance their current state and their to be state are the ones who will truly be successful and who will be able to continue to grow at a faster pace.
Let's embrace
I'd
multi.
like to add a point there.
Yeah,
I think
quickly.
from a future perspective, of course, hyper personalization and all that is there. But I think the whole experience is going to be a big thing. So, gamification is going to be big in the future, whether it's, gamification as a process in terms of applying the loan, how well you make it, gamification in terms of customer engagement, how you gamify the whole thing of him spending more, buying more, all that, gamification and learning for employees, increasing their productivity, everything. So I think from a 5-10 year down the line perspective, I think gamification is going to be a huge technology development.
I think taking cue from what Amit and Tulika said, one is that let's be ready for embracing the innovation from multi-dimensions and think big or go home. I think that's how we can also summarize both of your vision. Shiva, your thoughts on the future quickly, a minute to you.
I'll just take in another dimension. I think there is a theory which is going on. Keyboards will be gone in a decade. So it's more of voice. Now, if you see, most of young generation, teenagers, they feel proud to use the voice, asking Google in their mobiles or, at Google Home, Siri, Alexa, all those. Whereas, elder generation feels little, shy, if I have to put exactly. So, but that the perspective is going to change. Voice is going to come a lot, be it that has already penetrated in the company and industries, be it as voice blast or voice bots and all. So voice is one thing which I see. And moreover, there's a bright future for NBFCs because India is turning more from an savings to consumption-based organization. So one more dimension which I want to add was voice.
Voice. Indeed, we can already see kind of interventions being done, playing with the voice technology, and a lot of transformation is already happening, even in health sector also, if you talk about voice related solutions. We are talking about future. I'll ask the last question to Ashish. Ashish, is co-lending the future, or do you have any other perspective on that?
Great. I think right question at the right time. So anybody is aware what is co-lending from the audience? I think because in the newspaper you are seeing on daily basis that this NBFC has tied up with this co-lending. So daily basis you will see one news is coming in the newspaper. So what is co-lending between banks and NBFC? Anybody can give any thought on that? Okay. So yeah, please. Yeah, so it's a joint loan by the banks and NBFC. So I think it was prevalent earlier where the two banks were joining hands and then lending actually. But it was not there in the country where the NBFC and banks were joining together and giving the loan to the borrower actually. So I think you see the banks have a lot of money, the public money there. NBFC has the ability to lend. They have the methods of assessment of the borrower, how to underwrite the borrower of informal income borrowers. Then they have the reach also and the collection, because NBFC business is not the lending business actually, it's a collection business. Somebody who can lend and collect the money, he will be the winner in this game actually. So the RBI or the government discussed a lot and then they have come out with a solution where they said that banks have money, NBFC have all these things. Why can't they join together and then lend it to the market actually? But for this, the major requirement is digital. Digital, if what we are talking, this chatbot and all these things basically, without digital, this co-lending cannot happen actually. So you see in NBFC business, the problem was money, which has been solved. For banks, the informal customer underwriting of that customer was a problem which has been solved now. Now the technology has come to in the picture where the banks and NBFC join together and they can lend to the ultimate borrower actually. So because we have the CTOs and CDOs here of the large NBFCs, I'll say that within next 2-3 years, this will be a complete game changer on the sourcing of money side actually, because money is raw material. So from your point of view, if you will apply the thought process where you can think of how the co-lending can help in the entire onboarding of the customers, and the treasury part can look at from the banking side where tie-ups can be done, and you can find out the solution. Because every bank, we are talking to the banks, every bank is facing the challenge of technology. So co-lending is taking off, but it is taking off slowly. But the NBFCs can come out with the, I think, some strategic solution that this is the technology which I will use, and the bank will give money and I'll lend the money to the borrower. The bank will get everything at their doorstep actually, because the banks are hesitating if they will lend money through NBFC, because front page is NBFC. Something will go wrong, then how they will control it actually. But this can be done through technology also. So within next 2 to 3 years, I'll see in the entire NBFC business, the 20% of the lending will be through the co-lending. Subject to that, the large NBFC should come forward and they should take the lead in that. So it will help in 2 ways. One is the customer will get the money at the cheaper rate, because ultimately the NBFC are taking money from the bank and then lending further. Here the bank is directly giving money to the customer through NBFC. So the cheaper money will be available to the customer. And the another is the banks will get the better collection efficiency. So as of today, if you see that in the retail loans, the bank's portfolio NPA percentage is very high actually, but NBFC are managing very well. So for next 2 to 3 years, I think co-lending will be the big game changer, and the people who will miss the bus, they will see that why they have not done it earlier actually.
So co-lending will be the big game changer according to Ashish. I think that does bring us to the end of this wonderful discussion for last 45 minutes or 60 minutes or so. If I have to summarize, I think what Amit has said and others have said, Ashish has said, that I think the future of NBFC vis-a-vis digital transformation is going to be huge, brighter. You have to embrace technology, especially emerging technologies, in more efficient way, so that we can use it optimally to have better outcome. Also, important point raised by Amit, where he said that not only about customer-centric approach, but also what about the inbound development of the organization itself in terms of technology deployment. A robust data security infrastructure has to be there. Not going away with bots and other things. AI analytics is going to be there, and as you were saying that co-lending can be the future, and again technology is going to play a huge role in that, and also voice-based solutions. So I think overall we have tried to touch various aspects of digital transformation in the NBFC aspect ecosystem, and I'm sure that deliberations made today in this session will help many stakeholders of the NBFC paradigm to, I'm not saying they'll reach to a conclusion, but at least they will get some food for thought for next coming months and years. So thank you so much, all of you, for joining us today. I'll just request you to all of you to stay on the stage for a second. We are going to honor your achievement as a digital transformation leader from the NBFC sector. I request Mr. Rajneesh De, the consulting editor of APAC News Network, to come on stage and hand over the souvenirs to our eminent speakers for the NBFC sector. I think we can start with Mr. Shashank Bajpayee. He is the CISO of ECGC. A huge round of applause for him, please. To Mr. Lalit Trivedi, Head IT and Chief Information Security Officer of ITI Mutual Fund. To Jaya Janardhan. To Jaya Janardhan, Director and Co-founder, Creontech Consulting. To Mr. Amit Kothari, Chief Technology Officer, Indostar Capital Finance Limited. To Tulika Sonthalia, Head Digital Strategic Alliances, Hero Housing Finance. To Mr. Ashish Agarwal, Director, Resurgent India Limited. And to Mr. Shiva Kumar Nandipati, CDO, Fedbank Financial Services, FedFina. Can we have a group photo of the speakers together, please? Thank you so much. Thank you so much, all of you, for joining us today. I'll request you can, if you can all visit the Expo area and do join us for lunch after this. But before that, we have a important presentation by Mr. Siddharth Agarwal, founder and MD of Mobicule Technologies. So can we have Mr. Siddharth Agarwal on stage, please? A huge round of applause for him.
So hi, am I audible? Yeah. Hi, good afternoon, everybody. I think unfortunately the presentation is placed between the entire day and lunch. So I will keep it brief, not try to obviously push a lot of numbers out. There has been a lot of this. And fortunately, the discussion that happened before this particular presentation, I will pick it up from there. So the theme, I would definitely not go into too much details about how the industry is moving. I may not be the right person probably to comment on that. But I think a couple of days ago, there was a interesting quote by Mr. Uday Kotak from Kotak Mahindra Bank. He said it's very important to have return of capital. So that's what I will majorly focus on in the next 5, 10, 15 minutes that we'll go through. I think everybody has spoken around, giving capital away and return on capital. There is a very minute difference. It's on and off. So return off capital means you have given the capital and you want the capital back. Everybody has so far focused on ensuring that you get the customer onboarded and you give him capital. The larger problem which will start happening, not really a problem, but something which if it not attended correctly would be return of capital. So much of loans that are going out, how effectively and how efficiently we will be able to get those, get that capital back. If you look at the entire industry, the way it has moved, at least on the banking or the financial services or financial institution fronts, which includes the NBFCs, PSU banks, or the large banks, it has been majorly the early days, maybe the 2000 odd time. It was majorly the focus was around ensuring that you have the right core banking system. That's where it started. Then it kind of moved on to see if there are better ways to get the customer onboarded. So CRMs kind of graduated from that point of time. Then it moved to the cycle of having the right loan origination system, which means once the customer is in, how fast, quickly, and how in the best fashion you could give a loan to the customer. So that's where the loan origination systems started fanning. And then if I have to draw an analogy, it's basically your head, your body, and I think return of capital is the tail of this whole thing. I think there's a very common saying that "Hathi nikal gaya, pooch atak gayi," right? That's a very common saying that keeps coming in. So return of capital is that part of the elephant, which is very difficult. It's most of the times ignored, and it's very difficult to get hold and get it right. So I will spend some time just sharing. So I think this we all know how India is lending. It's a great story. There are numbers in trillions of dollars, and there are lakhs of crores that are getting. Whether it is a gold loan, whether it is a micro loan, whether it is a car loan, any wheels loan, home loans are picking up in a big way. So obviously, all the traditional lending has moved at a very frantic pace. Be COVID, be post-COVID, be pre-COVID, whatever that is, it has moved in a very, very, in a very, very critical and important phase, and it will only go up. I think we've heard enough since the morning how things are changing, and it will only go up. There is no way this is going to go down. with the kind of consumer power that is there. Though what is changing is the consumer preference. So earlier days when it was very common, if we I think speak to our our parents, they would have, if they want a home loan, they would go to an SBI or a Bank of India branch, sit there for half a day just to understand what papers have to be given. Then there will be multiple visits to get the loan. From there, the consumer preference now is a quick loan, right? That's where all the digital and the complete intelligence that is getting built into the software. There has been huge growth in retail lending. I think, needless to say that in terms of retail, I think it is almost 37%. I don't have exact numbers, but retail is contributing in a big way, and it will continue to grow faster. There is obviously, we just heard NBFCs now have ease of capital because they are co-lending with the larger banks. So there is a huge amount of capital credit that is available. Needless to say, all of us, I don't know when is the last time you signed a loan agreement with somebody. It is all digital now. It comes on your phone, you do video KYC and you get a loan or you get onboarded. So increase in the digital preferences or the platforms that are around, this has eased the entire lending, the way that lending happens. And the last part of it, which little bit I can pick up from the last discussion, was the co-lending. There are non-traditional ways of lending that has come to fore. So people are lending in a very innovative and a very advanced way, where two banks are collaborating, or there is a digitally smart co-lending company which goes out, gets customers, and finally you have a PSU bank who's finally giving the loan to you. So it's a very interesting phase on how the entire landscape on the lending front is changing. Now, moving on from there, this obviously brings up a lot of challenges into the system. Obviously, the more you do, the faster the engine runs, the more challenges it will bring up. All these challenges of the right asset quality, so which means what assets you have and how good those assets are, is now been brought to fore. With the increased and the stupendous amount of lending that is happening, asset quality is bound to degrade. It is a natural phenomena. It is not something that anybody needs to predict. It's a natural phenomena that is going to happen. Banks, NBFCs, PSU banks are now struggling with how to manage their capital adequacy ratios, how to ensure that they are well funded to ensure whatever is written off, it's not hurting their overall balance sheets. There is a huge surge in cyber fraud. I think in the last week there was, there was a good amount of noise around. In fact, I got a message from Tata Power saying that my electricity is going to be cut off at 11 if I don't pay. For a second, even I went and was about to click it. So the amount of cyber frauds has gone up, which brings further challenges for lending institutions because people are getting hold of databases, reaching out to customers. Customers are not available, are not aware how to handle this. So all these challenges require a very tight, end-to-end automation or processes to be put into place. The challenge is, I think what we have done well is we have built in intelligence, we have built in automation. We are now talking about RPA, which is automating the processes, which has been probably done well, but within silos. The next leg is going to be bringing all of this together under one umbrella, under a single platform, so that you have complete end-to-end control and there are no leak points within the system at any point of this. This cannot be obviously solved without the right people and the right technology. I think enough has been said, enough will be said, and enough will continue to be said about technology, which is obviously our core business as well. But without the right people and the right technology, managing this huge growth is going to be the most important or the tricky part of the challenge. I think it's becoming increasingly difficult to find people with the right background, right technology set, with whatever skilling and that you do. So moving on from the challenges, I'll deep dive a little bit more on the base theme, which is return of capital. Now, how will people, processes, technology help you do that? So what you have done is you have got a very good core banking system, stable, scalable, taking care of everything that is possible. You've got an amazing CRM in place. I think the BFSI sector is under a huge adoption of latest CRM technologies and platforms, which is ensuring that the customer that comes in, and if there is a repeatability that has to be done, the CRMs are taking care of it, and there is a huge surge which is happening. That's well taken care of. Majority of the banks, NBFCs, are in the cycle of deploying their loan originations and the loan management systems to ensure that the customer is tended the loan in a very quick basis, and once the loan is given, he's managed little bit properly, so that there are no challenges in terms of notifications or payments or things like that. So these parts again are pretty well well placed. They are well oiled at this point of time. I think there is enough focus where people have ensured that relevant softwares, relevant people, relevant technologies are taken care of, and it's it's now moves to a point where you need to ensure that all of these cross-share data. We have heard about data coming from outside. Maybe your credit bureaus are giving you data about how the customer is performing at a different organization. But it's equally important that the data between these and the real value of the customer gets derived based on the cycle that he goes through. Now, this is where people, process, technologies will help us, align this completely. Uh, uh, each place, whether it is people, where there is artificial intelligence, which is now taking over, machine learning is getting inside it. So the people part is being aided by technology, where you will have less dependency on people. The process part also, again, technology started playing a role. You have, I think, at least in the banking and the insurance and the NBFCs, the entire sector, RPA is moving very well, where you can do a lot of these jobs which were happening as a manual thing is now being taken care by robots or robotic software which takes care of this. So it is pretty much evident, and it is pretty much moving in that direction. The critical piece in it is each has to talk to each other and ensure that the end-to-end is taken care of. I'll quickly move on. This is where we kind of think, and we should be able to help a lot of lot of banks, NBFCs, or financial institution to get the return of capital. So वो जो हाथी की पूंछ जो अटकी हुई है, we need to ensure that we get that elephant out. There, when it means end to end, it has to be end to end, which means right from the point where the customer got onboarded to him being offered a loan. So at the point where the customer got onboarded, getting the right information, the right addresses, the right contact numbers, to the point that once the loan is given to him, the cycles in which he is paying and the registrations into e-natches and ECSs are right. The last part of it becomes is that how you're going to recover if he defaults, okay, or not let him default. These are the two parts which this entire return of capital depends on. We club it down into three themes. We say the return of capital, there are three parts to it. One is effective monitoring, which means you keep monitoring your customers to ensure that they don't default, or if they are on the verge of default, you provide the necessary help or necessary service or the necessary pipe. Maybe it is a restructuring of the account, maybe ensuring giving him an additional top up, whatever is the best way you could do that. That's the monitoring part of it. The second part of it is collection. So we talk about digital platforms, we talk about a lot of stuff. We still have a huge amount of rural India which is still a big player in the lending space, or be big contributor in the lending space. I was just chatting with somebody. I think almost we were talking about video KYC the other day. almost I think 40% people from the rural areas still do not have access to video KYC because it requires it to be online. It requires a decent smartphone to ensure that you can do video KYC. So that's the amount of percentage which is still out of this entire digitalization, which is UPI definitely has increased it in a big way, but there is a huge amount of these advanced technologies which we are not able to get to that population. So you have a rural India which still probably pays in cash because they have small amounts. The farmers, the people who take crop loans, who take tractors, they still pay a good amount in cash even after all the digital channels being available. Probably because it is cash in, cash out for them because they receive money that way, so they pull money out that way. So there is a huge amount of cash that needs to be handled when it comes to return of capital. Have we really thought how we are going to handle it? Because there is again a good amount of fraud that happens. This is where proper technology, proper collection of cash, as well as whatever mechanism you are going to recover the money needs to be taken care of. Of late, in the last 3-4 years, there has been an interesting, while UPI is being talked about, there is an Aadhaar-enabled payment system, AEPS, which allows you to just put your fingerprint through a mobile device, just put a fingerprint and withdraw money from your bank account. That has been a huge success as well, where rural customers, they don't have ways and means. They just put their Anguta over there and you recover the money from their bank account. So that comes on the collection part of it. So monitoring, collection. The last part, which is unfortunately, if the customer defaults, he doesn't have the wherewithal to pay you, comes the recovery part of it. Where if it is an asset-based recovery, you go and repossess his house, you go and repossess the vehicle, you repossess his tractor, you repossess his bike or whatever. So it's obviously an emotional situation when you are hitting the customer. There, right technology, right methods and right processes will go a long way in. It's a customer which is in distress. Bulk of the customers don't default because they want to default. Bulk of the customers default out of their financial situations or things that have not gone their way. So those customers need to be dealt in the right fashion, and that is where putting a right process, a right technology will help ensure that this is equally important in your customer experience cycle. We always forget that getting the customer is one part, maintaining it is another. When he is leaving you or he is in not right shape, the way you handle him, he will come back, right? He will come back out of his financial mess or whatever he is into. The way you handle him is equally important for him to be loyal to you when he has a need again or he is in the blue at that point of time. So how you deal with him in the red is going to be equally important. How he is going to treat you when he is in the blue. So this is where I think the entire return of capital story, begins. And I'm glad a lot of people in the industry now started talking about return of capital. It is not just about giving loans. It is about ensuring that you get the money back and you get the money back in the right fashion, rather, and the most effective way of doing it. I'll not spend too much time. This is what we are as we stand. That's a product portfolio that we do. So we basically deal at two ends of the cycle in this industry. One is where you onboard customers. So we ensure that right way you can onboard customers. And then we come at the tail part of it. We love the tail. So we come at the tail part of it when you want to really collect the money back, right? You have given the money and you want to collect the money back. That's where we have a path-breaking platform called M-Collect, which is being used by major banks and financial institutions. So I would like to sign off. I don't have much beyond this. Unless there are any questions, I'll be happy to take. Thank you. Thank you very much for being patient before going for lunch.
Sure, sure. And may I request Sanghamitra to just come on stage and hand over a small token of appreciation. We will be assembling for lunch now, and I would request all of you we'll have lunch for half an hour, and please reassemble here. We have two interesting banking and NBFC session post lunch. So requesting all of you to reassemble here in 30 minutes time.